Good morning, those who are online. Can you hear me?
Yes, sir.
Yes, sir.
Yes, sir.
Yes. Yeah, thank you.
Yeah.
So just we have to start from there.
Good morning, sir.
Yeah, we have to learn how to journalize the transactions. Okay. After that, we have to post it into the ledger. Then we have to prepare a trial balance. Actually, the basic objective of accounting. Anybody can recollect what we discussed the last class? Basic objectives of accounting. Can you recall why we have to keep accounting? What's the purpose of accounting? Basic objective.
To know the profit and loss of the company.
To record the financial transactions. Okay. Is that the sole objective of accounting? Attending class is not the objective of MBA. What is the objective of MBA? What is the objective of joining a course? No, not that much. Madam is telling understanding the concept. I'm not expecting that. That's different. That's very broad idea. To get the degree, right? First one. Of course, to get the degree, you have to attend the class. But what is the objective of accounting? Recording of transaction, yes, true. Accepted. Recording of financial transaction is one of the objectives, but that is not the only objective. What is the other objective? To know the financial performance of the business. Financial performance. The financial performance only sir is telling two words: profit and loss. Another objective: to know the financial position of the company, that is nothing but assets, liabilities, and equities. The last objective is to disseminate the facts and figures of accounting to the related parties. So the first and last is just a ancillary objective. It's happening just like that. But the middle two, that is center of the accounting. That is finding out the financial performance of the company, finding out the financial position of the company. Position refers to equity, asset, and liability. Performance refers to profit, loss. How do you get profit or loss? Income minus expenditure. So this is what we discussed the last class. Now the first objective, what we told, recording of financial transaction. To know the financial position, to know the financial performance, to make the facts of accounting, facts about the business to the related people, we should have something called record. Otherwise, it's not possible. So that recording only is going to take place today for the next 10 minutes. We'll discuss that. How do we record? The basic book to record is journal. You remember last week we discussed, the previous week we discussed about the entire framework of accounting. Okay, starting from journal to finance, not ledger. Ledger is a very next stage. So first is journal, otherwise subsidiary book. Please understand, it can be entered in journal or it can be recorded in subsidiary books. We discussed some subsidiary books: sales book, sales return book, purchase return book, cash book, bills receivable book, bills payable book, and journal proper. These 8 books we discussed. If the organization is bigger in size, we can't write it in journal those days. Today it is possible. Today we sell ERP or it is in the system. Okay. But those days, one after another, you have to write in a single book. Journal is a single book. It should be written in a chronological order. What happens first to be recorded first. In a single day, maybe 1,000 transactions take place. If that is the case, we can't write all the 1,000 transactions in journal in a single day by one individual person, because book is only one. Okay, I can't write in several, different pages at the same time. Those days. Okay, so people found another mechanism, another way of doing it. Okay, how to solve this issue of delaying in the recording. If 1,000 transactions take place in a single day, if I write only 200 transactions in the books of account in a day, then second day 800 is left over. Second day transaction again 1,000 is there, means 1,800. It goes on like that, accumulating. Okay, not able to complete it, or burden on the person. He has to do overtime. So that's all difficulty. So to avoid those difficulty or overcome those difficulty, we found out a system called subsidiary books. we already discussed. Okay. So instead of journal, we will follow subsidiary books, or we will follow only journal. Sir, my organization is very small. Only 20 transactions maximum in a day take place. 20 transactions take place in a day. If that is the case, I can just write it in a single journal. Okay. If you follow either journal or ledger, I mean either journal or subsidiary books, it should come to ledger. What is a ledger? I showed you the other day the format. Okay, the ledger is giving you the summary of a particular account. Rent paid, how much rent I paid in this whole year. I can't come to know from either subsidiary book or from journal. Whenever I pay rent, I will just write it in journal. If I want to know how much total rent paid in this particular year, I may not be able to understand from the journal. For that, we just take rent account separately. Like that, all the accounts. Okay. So this is what journal, and then subsidiary book and ledger. After preparing ledger, we have to prepare one statement called trial balance. Trial balance is the checkpoint whether the accounts have been maintained arithmetically correct or not. Arithmetical accuracy of the books of accounts being checked by a statement. The statement is called trial balance. So before you achieve your objective of accounting, that is preparation, I mean performance of the business as well as the financial position of the business. These two are achieved through two statements. One is performance of the business can be achieved through preparing a statement of profit and loss. Financial position of the company can be achieved, can be known by preparing a statement called balance sheet. So these two statements are going to be prepared after the confirmation of accounts are correct. That is called trial balance. Okay, next, after the trial balance is prepared, if you confirm that, okay, I'm done with my accounts, all the records are entered, all the records are kept properly, then I can go with finding out the profit or loss and finding out the financial position of the company. Okay, so now we start with recording. First one, journal. So you are understanding the broader idea. Okay, so first step is journal. How do we prepare journal? I already told you we classify the entire accounts into two. One is personal account, another one is impersonal account. In impersonal account, we have two. One is nominal and real. Nominal account and real account. Okay, we got a rule for this. Personal account rule says debit the receiver and credit the giver. Okay, debit the receiver. What is debit, sir? What is credit? Just for making the transaction to be recorded in the books of accounts, we have some plus minus, positive, negative, debit, credit. That's it. If you just interchange it completely, whatever I'm telling debit, you just do it credit. Whatever I'm saying credit, if you do debit, your accounts, your records will give the same result of what I have received from my records. It's only for our understanding, only for our easiness, we are classifying the things into two categories, debit and credit. There's nothing, no meaning for this. There is nothing called debit, there's nothing called credit. We just have simple plus minus. That in accountancy, we are having it called debit and credit. Okay, why do we follow this debit credit? See, I told you income minus expenditure is equal to profit. I should know what and all is income and what and all is expenditure. As a businessman, as a person, you are doing a business, you may be knowing it. But as an accountant or as an outsider, I may not be knowing it. Rent, expense or income? Why not it be income? So it can be either income or expenditure depending upon the case. Suppose you have taken this room for rent. That time for the college it is expenditure. We have taken this room. College has taken this room for rent. That time college is paying rent. Rent is an expenditure for this. Landlord, the owner of this building, he may have hundreds of buildings like this. He might have let out. Okay, he is receiving rent. For him, it is income. So generally, if you say rent, we can't have any idea. So it is received or paid. Then you have to write rent received or rent paid. That addition is required. So instead of avoiding that additional words, we just write. If debit is there, it's expense. If credit is there, that is income. Like for our convenience, we are just classifying like that. Okay, so debit the receiver, credit the giver. What does it mean? Each and every transaction is having twofold effect. Each and every transaction is having twofold effect. One is benefit giving, another one is benefit receiving. Suppose paid rupees 20,000 as salary to Mr. Rajesh. Now, what is the twofold effect in this transaction? From our business, money is, forget about debit credit, money is going out. That's one thing. What is the other thing in the same transaction? No, you're from the business point of view, you're talking about. From only one person point of view. You are the accountant of this business, not the accountant of Rajesh. Rajesh's account will think this is a income for him. This is a receipt of money. Why did you pay money to Rajesh? Salary. What does it mean? You have taken some benefit from him. That benefit is the expenditure for the business. To find out the business profit or loss, I have to add this in the expenditure column, expenditure side. Then only I'll get the true profit or loss. So you are giving money and you are taking the labor, you are taking the work from him. So one is benefit giving, another one is benefit receiving. You take another example. Purchased goods for rupees 20,000, purchased furniture for rupees 20,000. What is the twofold effect in this? Furniture is received. You are going to use that furniture for the rest of your life. Okay, furniture. Another one is the money paid. Cash gone out and furniture has come in. So what are the two accounts are affected in this case? Furniture and cash. Are they real or nominal or personal? Furniture and cash. Are they real, nominal, or personal? Real account. Why it is real account? All
It's
are
an
having
asset.
some form, some physical existence. Okay. Now, what is the entry you will make? First, I will explain about these three rules. Then I'll come to the same entry. First one is debit the receiver, right? Debit the receiver. It's already given to you. Just I'm recollecting it. Debit the receiver. Credit the giver. Credit the giver. Okay. Another rule is debit what comes in and then credit what goes out. Another one is debit all income and expenditure, debit all expense and losses, credit all income and gains. Okay. Debit all expense and losses, credit all income and gains. Credit all income and gain. If there is any spelling mistake, please forgive me. Okay. Typing is a little difficult there. Okay. So debit the receiver and credit the giver. Now you take any transaction. In any transaction, there will be twofold effect. I already told you. Twofold effect. What is twofold effect? One is benefit giving, another one is benefit receiving. Benefit giving, another one is benefit receiving. In that case, we have to check the transaction with these three rules. Take an example. In my case, paid salary to Rajesh. Now Rajesh is immaterial because he is not taking money on account from you. What is that money on account? Money on account means you are settling his amount, what you've taken from him long back, or you are giving him some money which you are going to get back from him later. That is what we call it as money on account. But he is receiving money from you for what? For the hard work what he has put in your company. For that you are just compensating his work. So now what is the entry we can make now? What are the two accounts are affected in this? One is cash. Another one is salary, expense. Okay, so what is the entry? Expense is what? In this 3 rule, where the expense will fit in? Is it real or nominal or personal?
Personal.
Personal, sir. Somebody is telling personal. Why, sir? Salary is personal. Why salary is personal? Okay, before that, then we have to understand again what is personal, what is real, and what is nominal. What is personal? Any account that affects a real individual or an entity. That's called personal account. You, me, institute, bank, government, company name, all these things are called as personal. Two personals are there. One is real personal, real, natural person. Another one is artificial person. Dayananda Sagar University is an example for personal account, artificial person. Okay. Sagar, Mr. Sagar is a example for personal account. It's a real person, natural person. Okay, State Bank of India is an example for what? Forget about natural and artificial. Only one heading, personal. You understand what is it? So SBI is an example for personal account. Okay, Government of India is an example for personal account again. Government of India. Okay, Usha Enterprises, personal. Rajesh, personal. Ravi, personal. Ravi and Co, personal. Okay, so these are all personal accounts. Now in my example, money paid to Mr. Rajesh as salary. Two accounts are affecting. One is cash balance, what was there in my company is going to reduce by 20,000 rupees because of this transaction. So that account is affected. Another one is salary, what was total salary so far paid by the company is 2 lakhs. Because of this transaction, the salary paid by the company is going to increase by 20,000. So which are the other account is affecting? Salary account. So salary account is affected and cash account is affected. So salary account is not a personal account. Salary is a nominal account. What is nominal then? Nominal means any name we only give to that particular component of account. Rent, commission, interest, salary, wages, donation, sundry expense. These are all the name we are only giving to that name. Money given to the landlord, we call it as rent. Money paid to the bank, we call it as interest. Same money if we pay to the political parties, then we'll call it as donation. Same money. We only categorize that. For what it is going, the accountant is categorizing it. The accountant is naming it. Okay, the Raman culture is given by the accountant. That is why we call it as nominal account. Nominal. Okay, nominal account. Okay, then what is real? Really, it will be having some physical existence or some kind of what we can say. We can feel that, we can realize that existing. Maybe tangible or intangible, that's okay, but it will really there. Okay, patent, furniture, building, land, stock, goods. These are all the example for motorcycle, van, vehicle. These are all the example for what? Example for real account.
Real account.
Real account. Yes, good. So now you tell me the entry now. What is the entry? Why I'm telling you what is entry? What do you mean by entry? Entry means what you are writing in the journal. So how the journal is looking like? The other day I have given you the format. I'll just take a format here again. Yeah, journal. It has date column, particulars, ledger folio number, date, particulars, then ledger folio number, then amount, debit amount, credit amount, debit column and credit column. Debit credit is nothing but I'm going to write the amount. Each and every transaction will have two-fold effect. Both need to be entered in the books of accounts. Books of accounts nothing but journal or subsidiary books. Okay, if you enter both, we'll call double entry bookkeeping. In my example, salary paid to Rajesh, I'm going to write two accounts. One is salary, another one is cash. If I pay through check, I will write in bank as well as in the salary. Okay, so if I write both in the books of accounts, that is called a double entry bookkeeping system. That's what we are following in the practice. Okay. Now, date column is there in the journal, particulars column, ledger folio, and then debit credit. Okay, debit credit. Date. Suppose today, what is the date? 20 or 19th? 20.
20.
So 20, yeah, 20 March 2022. If you paid salary, okay, paid salary. What's the entry now? Salary account, debit. Why it is debit?
Because it's
It is expense. Look at the rule here. As per the nominal account rule, debit all expense and losses. So salary is an expense. So I'm writing it here. Salary account. Look at this. How I'm writing. Salary account. I'll write A bar C account. Those are engineers I'm telling. A bar C account. Okay, debit. We will write DR for debit. And colloquially we will say debtor. DR. Debit or debtor. Okay. Salary account, salary account debit, or you can say salary account debtor to the other one. What is that other one?
To cash.
To cash.
to cash.
Why cash? Cash account is reduced by 20,000. That is why I'm writing cash. What is the rule based for this? Real account rule. See, what is it? Credit what? Goes out. What is going out? Cash is going out. So I'm writing cash. To cash. Okay. And we have tried a small explanation for this. Those days we had only normal books, See, if you want to verify later on, you may not be knowing it what for this entry is made. So you have to write near to that. That is called narration.
No.
Narration. So within bracket, you have to write being salary paid in cash. Being salary paid in cash. This is called narration. This will help you to understand why for this transaction is there. Why for these transactions are there. We can just understand later if you verify something. Okay. This is the entry for salary paid. Okay. Is it understandable how you are taking the salary account debit to cash account? Amount? How much? 20,000 and 20,000. 20,000. This 20,000 should be in the debit side. Okay. 20,000. Salary account debit 20,000 to cash account 20,000. Right. You tell me some other transactions. Any example for transactions?
Purchase furniture
Okay, 1
for
second. Somebody is
10,000.
asking what is LF number? It is a ledger folio number. You remember I told you after the journal is done, we are going to post all these transactions into ledger. So which page of the ledger this entry is going to be posted? Okay, that number you have to write it in real life, but we don't have that connection. We are not going to prepare any ledger for the same thing in the page number. So we just leave it blank. But in real life, there should be a ledger called cash ledger. There should be a ledger called salary ledger. That number will be written there. Okay. Against cash, the ledger number of the cash book and our cash account, and then salary account ledger number, page number should be written there. Ledger is a voluminous book. That book will be divided into so many subheadings. Sub book. Okay. Suppose the ledger book is having 200 pages. First 10 page will be allotted for cash account. Next 10 page may be for bank account. Another 10 page may be for another account. So which page this account is there maintained, that number will be written in real life. But here we don't write anything, we just leave it blank. Ledger folio number. Okay. Anything else in this? All right. So now next any other transaction, you please tell me. We'll try to understand that transaction, how to make a ledger.
Any purchase of asset, company asset or
What
machinery?
is that?
Any purchase of machinery?
Any purchase of machinery. What is that? Any purchase of machinery?
Maybe purchase of mouse for
Purchase
the
of
mouse for the system or keyboard for the system.
purchase of what?
Mouse or keyboard.
Mouse, keyboard. Okay.
Yeah.
Okay. So purchase of computers.
Yeah.
He
Computer
is having already
accessory.
computer, he is buying the laptop, now he is buying mouse, but we will assume mouse comes along with laptop. Sir, why are you buying the mouse?
Hey, maybe
You are
it
going to
is
sell it or you are going to
accessory.
give to the accountant to use it? Sir, mouse. Why are you buying it? What for it is?
It is to keep it for maybe if somebody's mouse goes out while working. So it
Okay,
is
the employee is going to use that mouse for the company purpose.
yes, yes, yes.
Okay. So buying of computer peripherals. Okay.
Yeah.
Computer peripherals for 20,000 rupees. What is the entry now? Purpose is very clear. It is an asset actually. If you are treating it as a asset, it is going to be used in the business only. If you are going to sell it, suppose you are a computer peripherals vendor, that time purchase of mouse is not an asset, not a fixed asset, current asset. You have to treat that as a goods. Okay, now entry. What's the entry? Is buying for cash. Sir, are you paying cash?
Yes.
Yes, sir. Okay, so what's the entry? Cash. In this journal entry, the cash, again, same logic comes there. Salary paid. Cash is paid, so credited. Cash credited. Here also, the vendor is receiving cash from you. You are paying cash. Cash going out. So same logic. You have to write cash credit. Then what is to be debited?
The
What
vendor
are the two
name.
accounts are affected in this? One is computer peripheral account is affected. Another one is cash account is affected.
Yes.
So both are nominal or real or personal.
Mouse is real
Real.
Okay, mouse is real.
and cash is
Also real.
personal.
Cash is personal.
Cash is real likely.
Cash is
So we
also
are
real.
not clear about what is personal, what is nominal, what is real. Again, I have to come back there. Real means what is really there with us. Real. Personal means people like you, me, or any artificial companies. Only that two are personal. Name of an individual, name of the entity, irrespective of what entity it is. Bangalore Municipal Corporation, or today BBMP. It's an example for personal account.
Personal account.
Personal account. Bangalore University, example for personal account. Okay, only those things are possible in personal. Name of an individual. Asha, Surya, Vijay. These are all names. And company name. Name of an individual, name of anybody, and name of the company or name of the entities. Sometimes company, entity means any organization. Government of India is an organization. Political organization. That's it. Okay. So these are all only possible things under personal. Apart from anything of these two is called impersonal. In that impersonal, we have two. One is real, nominal. Real means really it should be there. Some kind of existence are there. Nominal means it won't exist. We only just tell in that name. You are going to your home and you're telling, today I got a salary of 25,000 rupees. You're showing it. Where is the salary? What you are showing? Only 25,000 rupees you are showing. And you are telling that it is my salary. Suppose on the way you are coming and you found some 25,000, some cover is there and you are finding it, nobody is there and you are bringing it. And you are showing to your friend, this is what I found on the road. Found on the road. That you can, will you call that as a salary? But that time also it is what it is. Asset is a real, it's a cash. So we have two things. One is cash, what you really have on your hand and you are showing to your friend. This is the cash which I found on the road. And you are putting one name for that. Cash is a common name. Okay. Suppose you are going to your friend and telling, this is the 25,000 rupees which I borrowed from one of our common friend. That time it is called loan. Irrespective of anything, it is cash. But you are only putting name for that cash in different situations. Sometimes you're telling it's salary, sometimes you're telling it's a donation, or sometimes you're telling it's a gift, sometimes you're telling it's a loan, subsidy. You are having so many names for that. So that case we call it as nominal. We ourselves, based on the purpose and situation, name something that if you do that, that is called nominal. Example for nominal is interest paid or received, rent paid or received, commission paid or received, salary, wage, all these things. Now tell me the situation here in our case, purchasing of computer peripherals for 25,000 rupees. Two accounts are affected. All the two are real accounts. All the two are real accounts. Only real. Cash is also real. Computer peripheral is also real account. So what's the entry? How do you pass entry? Look at the real account rule. Debit what comes in? What is coming in?
Computer
peripherals are
account
coming in.
to cash account.
What is going out? Cash goes out. So what's the entry? Computer account debit.
Yes.
Or you may have
Cash
only
account.
one account, or only all are put together equipments. You may have so many equipments. Okay, mouse, then hard disk, then so many other things you may have it. You cannot write all the things separately. You can't write it. So the account will group it into one name: equipments, computer and equipments, or simply computer account. He will be giving an explanation for that. What and all will be included in computer account. No, sir, our company is a bigger company. Mouse itself we have 1,000. Mouse itself we have 20,000. That time the accountant feels that comfortability, he can have one separate account. It is not his whims and fancy. He can create as many accounts as he wants. There should be some comfort. There should be some kind of basic logic for that. And again, if you are such a company which is governed by some of the legal requirements, they will guide you what name you have to give. In some cases, not all the cases, accounts are purely internal, but sometimes reporting becomes an issue. Many people are giving money to you. You are only using their money into your business and you are doing your business. That time government makes you to follow certain guidelines in terms of reporting. That time you have to follow what account name should be given. Okay, you can have subheading of your own name, but while reporting it should be grouped into one category. Yes, for example. Okay, this is what we are discussing just now. That's an example for that. Okay, so that's what I'm telling. So in academics, we can write the name of the item what you are buying. No, nobody is bothering, but the logic you have to understand why it is. Okay, so entry is computer account debit or computer and peripherals account debit to cash account. 25,000 being mouse purchased. How many mouse you can write it at the rate of what it is for the total amount of 25,000. Okay, any other example for transaction?
Sir,
Cash paid into bank. One second, sir. Those are online. 1 second. One of your friends in the classroom is telling cash paid into bank. What's the entry? Cash paid into bank. What are the accounts are affected here? My bank balance.
Cash in bank.
My bank balance is going to affect. And another one is my cash balance. Cash balance is going to reduce. Bank balance is going to increase. Common understanding. Now come to the accounts. Which are the two accounts are affected in this? Okay, bank account and cash accounts are affected. In a broader category, real, nominal, or personal?
Real accounts.
What is real account here? Cash is real. Bank?
Cash.
Personal. State Bank of India. Instead of writing that only, you are writing just bank.
Bank is personal.
bank is personal.
Bank is a personal account. Good. So instead of writing State Bank of India account, you are writing simply bank account. Suppose you have account in two banks. Definitely that time you have to write the name of the bank. Suppose ICICI Bank, you are having one current account. State Bank of India, you are having another account for your business. Okay. Now, which bank you are depositing, you don't know. You have to understand first that. If you are depositing only in SBI, then you have to write State Bank of India account debit to cash account. 50,000. If you are depositing in ICICI Bank, then ICICI Bank account debit to cash account 50,000 rupees. Suppose, sir, I have two accounts in ICICI Bank. That time, account number, then ICICI Bank. That is making the job very clear. Okay, fine. So it's understandable, right? Within bracket, cash deposited into bank. Okay, any other transaction? Yes, sir. Somebody from online was trying to say.
Sir, just want to understand if it is like CSR or social cost.
Little louder, little louder.
If the account is for like CSR or social cost,
You tell me the transaction.
yeah, maybe account is given for maybe a society of
Account cannot be
Driving.
given. You tell, forget about accounts, forget about account. You tell me what is happening.
donation for blind people.
Donation for
Blind people.
donation. Okay, you given 20,000 rupees to your trust who is working for or who helping for blind people. Okay, what's the entry? What account is affected? One is undoubtedly affecting. What is that?
Donation.
Without any doubt, we can simply say which account is affected. Cash account or cash balance is going to come down. That account is affected. Another account is donation account.
Yeah.
What is donation account? Nominal. So what's the entry now? Donation account debit to cash
Cash
account.
account.
Donation account debit to cash account. Donation is an expense. Okay, according to nominal account, look at the nominal account rule. Debit all expense and losses. Donation is an expense or loss. Non-operating expense. Donation is a non-operating expense. Without giving donation also you can do business. Otherwise, that is different. Sir, without giving donation to this person, he will not allow me to do business. That is different issue. But without donation itself, I can do the business. It's a non-operating expense. Is it clear, sir?
Yes, sir.
Donation, yes. Yeah. Any other transaction? Think it out. Okay. What is credit? Anybody? Everybody is understanding? You are not paying money now. You are paying. You are giving a promise. Sir, give me some goods. I'll sell the goods and give back your money. On promise, you are buying something that's called credit. Credit purchase. He is buying goods. He is very much clear. It is goods. He himself is telling it's goods. Meaning, it is bought for the purpose of manufacturing something or selling, just like that. Process or just selling. Okay. So what is the entry? From whom you are buying? From whom you are buying? Somebody told no? Raj Enterprise, Raj and Company. Now Raj and Company is important here because you did not pay cash to Raj and Company. Suppose you pay cash to Raj and Company is immaterial for us. For us, what is affected? Goods increasing, cash decreasing. So goods account, cash account affected. Then you have to look for which are the two accounts, real, nominal or personal. But here he is not paying any money. He has told that, sir, I'll give you later. So his name is to be remembered in our books. Then only we can pay later. Okay. So Raj and Company is an example for which account? Personal account. Goods is an example for real account.
Yes.
What's the entry now? As per real account, debit what comes in? So what is coming in? Goods coming in. So goods account debit to
Raj and Company.
credit the giver. Who is the giving of goods? Raj and Company. So goods account debit
Raj
to Raj
and
and
Company.
Company. That's the entry. But actually, goods cannot be just entered like that. We may have so many goods. Name of the goods we can write. Otherwise, purchase of that name of the goods. Purchase of so and so. If you write goods account, that is a real account. Goods account debit means real, you are treating that as a real account. But actually, purchase is not just real. Why are you buying it? Why are you buying goods? To sell it. So what is that called? You are just spending some money to make your sales comfortable. If you treat purchase, we are giving a nominal name for that. Goods only coming in. But instead of writing goods, I'm writing purchase. Both are correct. If you write goods account, then you have to write one more, you have to create one more account. All goods will be there in the goods account. Then when you take the goods for sales, you will make purchase account. Or goods taken for sales account like that. But that detail we don't go. You write purchase account debit to Raj and Company account. Purchase. When I will write computer account, when I will write purchase account, computer account, when I'm writing means that is going to be used in the business itself. Same computer I'm writing goods, I mean purchase account. That time I'm You are in computer. You buy computer. That time I will write goods account or purchase account. So in this example, purchase account debit as per the nominal account rule, debit all expenses. Purchase is an expense, so purchase account debit. Otherwise,
Get
debit the item what is
Hmm.
coming in.
Sumir
Purchase account debit.
not part code.
Either you can do purchase account debit or you can write goods account debit. But only one chance of credit, that is credit the giver, that is to Raj and company account. Why do we write all these things? To finally find out how much I have to pay to Raj, how much goods I bought, how much computer I bought, how much cash is available. Okay, that can be known from ledger. It's a continuous process. Okay, next, any other example? Yes, sir. Okay, there are two transactions actually. You are buying from somebody furniture and you are giving it for charity. Okay. Have you paid money to the vendor of your furniture? Then you don't worry about the vendor name. What's the entry for first one?
Then somebody is
Furniture account debit.
mute.
Sir, sorry to
Furniture account debit
interrupt.
to cash.
Some background
Sir.
noise.
So there is someone who is unmute.
Nalini, please mute कीजिए.
Those who are online, please mute yourself. Those who are not speaking to us, if you are talking to us, we will wait and we will listen to you. Yeah. So one gentleman in the class is telling we are buying furniture and we are donating it for charity purpose. What's the entry? We are on mute. I'll check. Is it recorded or not? I'll check, and if it is not, I'll make it. Yeah, you tell me what is the entry for buying of furniture? Furniture account.
Furniture account debit.
Furniture account debit to cash account. Then same immediately is donating that furniture to some charity. So what account? Charity account debit or donation account debit to furniture account.
Donation account debit to
Two transactions. Okay. Furniture to cash, one entry. Again, cash, charity to furniture. Either you can write charity account or donation account. Depends. If you have two separate account, you can write separately also. Donation is especially money what you give. Charity account, it includes money and kind also. It depends on your accounting head of accounts. Okay. You can have donation and charity account, or separately donation account, separately charity account. If it is any account like that, you have to debit that account to furniture. Why to furniture? Furniture goes out. Why donation account debit or charity account debit? It's an expense. Okay. Anything else? Think about very normal transactions.
Just one question here, sir.
Yes, sir.
Yeah. If, for example, if it is not like a furniture buying, let's say, for example, I'm just
Close to the mic and little louder, please.
Yeah. Are you able to hear me?
Yes, yes.
Yeah. If I am, let's say, giving a gift to somebody, let's say it's a property, and property is directly registered in that other person's name, then the similar approach we have to follow.
See, whatever happens, whatever hypothetical, whatever, even after 1,000 years down the line, if anything comes also, you have to follow the same thing. It won't change. Unless otherwise we are finding out any triple entry bookkeeping system or 4 entry bookkeeping system. Unless otherwise that is happening in this world, there is no chance for that. We are very comfortable in this. So it won't change. It has to be follow the same thing. You are giving donation, whatever it is, to whosoever name you are registering, no matter. We call it as donation. That's it. No, sir, I want to create one more account. Create it gift account. Gift account. So how can I take it as a donation? I'm just giving a property as a gift. Create a gift account. But all are having the same logic. Gift account debit, donation account debit, charity account debit. All these three are considered as debit all expenses. It's an expense. But all these things are non-operating expense. Why? It is not connected to your core business. 4 business activities. Are you getting, sir?
Yes, sir. Yes, sir.
Yeah. Forget about your very much imaginary mind now. Come to the normal business. You have not told so far any normal business transaction.
Sir, any maintenance for
1 second, sir. Online. Sir, 1 second. One of your friend is telling. Yes. Now, same thing, same logic. We paid full and we did not paid full. In this case, half is there. Combine that entry. That's all. Furniture account debit. As we take furniture. Furniture account debit 1 lakh. To cash 50,000. To Raj and Company 50,000. It's called compound entries. You can write 2 entries separately also. Furniture account debit 50,000 to cash 50,000 over. Furniture account debit 50,000 to Raj and Company 50,000. These 2 also can be possible. Otherwise, in both cases, furniture is a common debit. I repeat again, furniture account debit 50,000 to cash 50,000. Furniture account debit 50,000 to Raj and Company 50,000. In both cases, furniture is a common debit, having 50,000 each. Instead of writing 2 debit, I'll write only 1 debit together, the amount together. Furniture account debit 1 lakh, to cash account 50,000, to Raj and Company account 50,000, being furniture bought for 1 lakh, out of which 50% paid in cash and 50% yet to be paid. That's it. Narration. That's all. Okay. Anything else? Any
Hello.
other? Yes, sir.
Sir, any cash payment made for factory maintenance?
Maintenance account debit to cash account. Cash payment made for maintenance, repair and maintenance. Repair and maintenance comes under which account? Nominal.
Okay.
Debit
It is
all
nominal.
expense.
Nominal
Repair
expense.
account debited to cash account. No, sir,
Okay.
the repair is not just the regular routine repair. It
Hmm.
has added the value of the asset itself.
Right.
This classroom is having this many facility right now. We think that this what you can say, LCD projector has become obsolete. You are just putting some kind of extra capacity to it to make it usable in modern days. That is not just repair. That time what you have to do, you have to add the value of asset. Equipment account debit to cash account. If it is a regular routine maintenance work, then you can consider that as a maintenance account debit. If it is adding the income earning capacity or it is adding the capacity of the fixed asset, then you have to debit the fixed asset itself. Suppose there is a piece of land. On that you are constructing something. That time what to do? Land and building account debit to cash. You spend 5 lakh rupees to construct a small shed, parking, bike and cycle parking shed you constructed. That time it should be debited to the name of the asset. Okay, shed account debit or land and building account debit to cash account. Anything else? Yeah. Yeah. You have to only pay. I can't pay. You are asking about your account, your books or university books? Both. Okay. First one which you want? Your account, your book, not your account, your book. The individual, the student book. What's the entry, sir? He is paying the fees. What is the entry? Forget about every time you cannot say the personal account, real account, nominal account. You have to forget that. Automatically should come in the picture. Tell the entry. Sorry. First installment cash account. Why installment and all you bring into picture? You are not giving any credit. You paid money to whom? The university. Tuition fees account debit, not Dayananda Sagar. Tuition fees account debit to cash. That's it. Tuition fees is 3 lakhs. You are paying 1 lakh, 1 lakh, 1 lakh. No worries. Tuition fees account debit 1 lakh, to cash 1 lakh over. That's what you paid. What is the guarantee that you are going to pay the next 1 lakh? We don't know. Future is uncertain. We don't know. And again, moreover, we write only what is happened. That's all. What is going to happen? Second installment, I will pay. Okay. Good. Who should worry about that? University should worry about that. Collection department of university should worry about that. That's it. Second installment, you are paying. Again, tuition fees account debit 1 lakh to, okay, same entry I write it 3 times in 3 different point of time. That's it. Okay, but no individual will maintain an account like this. Individuals in diary will write it. Yeah, it's possible. Yes, if you want that details, you can put it in narration. Okay, but forget about this. Come to what sir asking, that university, that matters a lot. Individual, they will not write also. Individual, we are not talking about individual also. We are talking about institutions, businesses. What they will write? Cash account debit or bank account debit. If you pay through account transfer or if you pay through NEFT, they will write bank account debit to, why cash account? Employee account. Personal account means what? They have to pay back to you. If they're writing your name again, what's your name, sir? Raghunath. Cash account debit to Raghunath means, cash account debit to Raghunath account means what? University has borrowed from Raghunath. That's the meaning. Is it so? No. Or another possibility is, university has received some money from Raghunath, to whom university has already paid some money on account. You got it 1 lakh rupee from university last year, you are paying back today. If that is the case, cash account debit to Raghunath account. But Raghunath is not just a person, he is a student. For the benefit what he is going to receive from the university, he is paying, compensating that benefit. Tuition fees account. Okay, cash account debit or bank account debit to tuition fees account. If university has made mandatory that installment, then they can create that account. Tuition fees account, credit 3 lakhs. Cash account debit 1 lakh. Raghunath account debit again 2 lakhs. Cash account debit 1 lakh. Raghunath account debit 2 lakhs. To tuition fees account 3 lakhs. They recognized all the 3 lakhs as fees. They just made an account with Raghunath. Now Raghunath is obligated to pay 2 more lakhs in the future. When Raghunath is paying in the next installment, what they will write? Cash account debit to Raghunath account. Again 1 more lakh, cash account debit to Raghunath account. It is again depends upon the company. They want to create that installment account, they can create it in their books. Okay, fine. Anything else? Come to the business, come to the more of business activity. Yes. He's just starting. Okay, opening a business, starting a business with cash rupees 50,000. Raghunath takes 50,000 rupees from his personal property and he is going to start a business. He started a business, just started a business. What's the entry now? Business is receiving how much? Business is receiving how much? 50,000. From whom? From the owner. So what is coming in? Cash coming in. Don't talk from the Raghunath point of view. We are talking about Raghunath Enterprise now. Raghunath is different from Raghunath Enterprise. Raghunath Enterprise receives 50,000 from Mr. Raghunath. For what? As a owner, he is contributing as capital. So what's the entry now? Cash account debit to Raghunath's capital account 50,000. Or simply capital account 50,000. Why? Capital account is nominal or real or personal? Personal account. Capital account is personal account. Instead of writing Raghunath, I am writing that some name. Why? There may be some Raghunath as my vendor, there may be some other Raghunath as my customer. To differentiate the Raghunath of owner and Raghunath of customer and vendor, I am putting another word called capital. That's it. Otherwise, truly speaking, cash to Raghunath only the entry. But Raghunath is not just a Raghunath, he is owner of the business, owner of that business. Suppose there may be another owner. So 2 owners are there. Raghunath is giving 50,000. Ramesh is giving another 50,000. That time I can't just write cash account debit 1 lakh, capital account 1 lakh. If I write, there's a confusion. What confusion is there? Who has given how much? Of course, in narration I can write it, but it's a relationship between the owner and the business. So I'm writing Raghunath apostrophe S capital account 50,000 to Ravi's capital account 50,000. Within bracket narration, being business started by cash 50,000 each from both the partners. Okay. Entry is cash account debit 1 lakh to Raghunath's capital account 50,000 to Ravi's capital account 50,000. That's all. Yes, sir. Goods sold to the customer. Okay, you got the money or not? That's important now. One by one, we'll go step by step. Okay, first one. What is the first one? You tell the transaction. Sold goods to X party X for rupees 1 lakh, and you received cash also. What's the entry, sir? Now, it's very simple transaction. Cash account debit to sales account. Cash account debit to sales account. Being goods sold for cash 1 lakh. Over. Next, sir. Okay. You are just not receiving money later. Yeah. So entry is vendor, the customer account debit. What's the customer name? We don't know. Customer account debit, party account debit to sales account. Whenever you sell goods as a business, sales account credited. If you receive money immediately, cash account debit. If you receive money in bank, that day itself, bank account debit. If you don't receive any one of these two, then party account debit. The party name, Raja, Ravi, Usha, that account debit to sales account. Suppose in the same transaction, I see it was telling, 1 lakh you sold to Ravi. Goods worth rupees 1 lakh was invoiced for Mr. Ravi. Okay, Ravi was invoiced for goods worth rupees 1 lakh. He paid only 20,000 immediately. The rest is going to be paid later. What's the entry now? Cash account debit 20,000. Ravi account debit 80,000 to sales account 1 lakh. Clear? Yeah. Anything else? Think it out. What is miscellaneous actually? One of your classmates is asking miscellaneous. What is miscellaneous? You don't have any major heading for that group of expenditure, that you group it into one category, that's called miscellaneous. Puja expense. Okay.
Sir,
Some small
hello.
petty expenses.
Hello,
Stationery. Sorry.
sir.
Yes.
Hello.
Yeah. Yes,
Sir,
sir.
in case of any sales or marketing person, they are need to traveling to the customer, right? So the traveling expenses comes into that real or nominal?
You tell me. You are telling traveling.
Traveling for sales, traveling expenses for sales or
Traveling.
marketing.
Second syllable, what you're telling? Traveling.
Traveling expenses for
Second
sales
one,
and
what you're
marketing.
telling? Expenses.
Yeah,
What
expenses
is?
for sales and marketing.
Whatever it is, sir. Sales,
Hello.
marketing, advertising.
No, sales for meeting customer.
No problem. He's going just to meeting somebody and coming
Yeah.
back also without
Yeah.
selling, without customer. He's going to meet his own friend.
Yeah.
He's going to Kapan Park and staying for half a day, and he's telling that today I just went around a corporation area. What is it? I don't know the name of the place. Okay, he's claiming that petrol expense 100 rupee. Okay, food allowance 200 rupee. Okay, 300 rupees he's giving a bill in the evening.
It is in
Whatever it is, that comes under expense. If it is expense, that should be called as
Nominal account.
nominal expenses.
Yes, sir.
Okay.
Nominal account. So
Okay.
traveling expense account debit in his original name, traveling expense account debit to cash
No,
account. That's
cash
it.
account.
If it is paid in cash, if it is paid through bank, to bank account.
Okay.
Anything else? Yes. Two. Simple. Tell the full entry. Laptop account debit to cash to bank. With amount, you tell me, madam. Laptop account debit 1 lakh to Simple. You see, whatever you see, whatever you think, whatever you imagine, whatever you see also, that should fall under, that will fall under these three categories. Okay. If you find anything which is not falling under this category, then you have to rethink about accounting. Everything will fall under this. We made very clear. See, we have only 5 things in the basic we discussed: income, expenditure, asset, equity, liability. Only these 5 things are there. Whatever you say, that should fall under this 5. That 5 has been captured here. Look at this. Debit the receiver. Who is he? The receiver may be a person or an entity. We are debiting him. He is receiving some benefit from us. That person can be a owner, or that person can be a customer, or that person can be a supplier. That's it. Similarly, same thing, giver also. It can be a owner, the benefit given to the business. By whom? It can be either by owner or by the supplier or by the customer. That's all.
Sir,
So
sorry
it's-
sorry to interrupt.
No
Sir,
problem.
are you displaying anything? Actually, we are seeing only one Excel sheet. Are you writing something? Because
Okay, we are not writing anything. I have just taken some example from your side and I'm trying to explain the journal entry for that particular transaction. Last one was one gentleman from the class, Mr. Raghunath, was telling that we are buying a laptop for 1 lakh rupee, paying 50% in cash and paying 50% through account transfer. For that, I told the laptop account debit 1 lakh rupee to bank account 50,000 to cash account 50,000. Being laptop purchased for 1 lakh, out of which 50% paid through cash and rest paid through bank. That was the last explanation. I did not write anything on the board. I'm just
Okay.
trying to explain
Okay.
these 3 rules by taking some examples.
okay.
Yeah. Any other few more transactions? Yeah. Okay. When you bought today morning, you bought it 9 o'clock. 9:01 he absconded. Not possible, no. Please take some transactions which are happening. How many people are absconding every day? Maybe in the world, maybe 1,000, 2,000 possible. But okay, anyway, he asked, we have to reply. Sir, it is 2 transactions. One is you are buying or selling. You are selling to somebody. Whom do you sold? Mr. X. Okay, this X is very much a problematic person. Okay, you sold to Mr. X. How much worth? How much you billed? How much you invoiced? 20,000. Sold goods rupees 20,000 to Mr. X. After that, X has become not traceable. X is missing. Okay. Now, what is your question? Okay. How to hide the? See, he is only bringing the answer. Okay. Where to go to Mysore is okay. So this Mysore road goes to Mysore. Answer is yes only. Okay, fine. Anyway, 2 transactions are there. One is sold goods. What's the entry for that? Sold goods. Sold goods to Mr. X. What's the entry? X account debit, right? X account debit 20,000 or 20, always 20,000 is not good. 30,000 to sales. To sales account 30,000. Okay. To sales account 30,000. Being goods sold to Mr. X on credit. Over. Now he is absconding. Okay. First of all, your selling department is that much poor to sell to a person who is going to abscond within 1 day. Fine. That is efficiency of the management. Your accountant does not have any right to question the efficiency of the management, but efficiency of the management can be known through accounting. Look at the sentence I'm making. Accountant does not have any right to question the management, but management is having all the possibility to assess themselves through accounting only. Okay, fine. Now he absconded. But if he is missing today morning, we can't call it as absconding. He might have gone for some emergency work. Some minister is not available in the limelight for 6 months or 9 months. Mr. Rahul Gandhi was missing in the last year. People are telling he's missing. Okay, right? So missing. When do you finalize it absconding? Some Reasonable time should be given now. Last week, Sir was not present. Sir was not present. Yes, sir. I can't simply say Sir has discontinued. If I say that's premature, I mean, I have some kind of wrong interpretation for his absence. Okay, fine. We finalized he is missing. Continuous classes, he is not come and he is not written exam and he is not replying to the calls. No reply, nothing, no information about him. That time he is called absconded, missing. That time what to do? That's all. Your money is gone. So what to do? It's a loss. Look at the rule. Loss. What the rule says? Debit all expense and losses. This 30,000 rupees becomes loss. What is the meaning here? X is going to give you 30,000 for the purpose of goods sold to him. That's what you written here. Being goods sold to Mr. X worth rupees 30,000. After 3 months or 4 months or 1 year, it is not traceable. What to do? It is to be treated as loss. So loss need to be debited. Okay, we have to give some name for that loss. That's why it's coming under nominal account. That loss we can call it as bad debt. This is called debt. This X is called as debtor. In this case, this X is called our customer. X is our customer who has not paid the money immediately. So we call him as debtor. Debtor, customer. Okay, now he is a good debtor up to some days. After that, he is becoming very bad because he is absconding. Not only absconding, he will be there. He will be there in his own enterprise. If you go there, he will just threaten you by putting some gundas. Don't come here to ask your money of 30,000. Then he will write a letter. He is threatening me. I'm going to commit suicide. If I'm committing suicide, he is the responsible person. Will he go to that side hereafter? No. No collection agent will go that side. That time also it is called loss. His intention is not to pay. First case is not there. We are not able to trace him. Second case he is there. We are able to meet him. But he is telling I won't pay. But both cases it is loss for us. So that loss is called as bad debts. So bad debts account debit. Bad debts account debit to what? To X account. Now between you and X, the relationship has come to an end. His account is tallied without collecting money. We told, okay, you are not going to give, fine. I just write off your account. This is called writing off the account. X account was written off. Okay. Suppose you may even imagine like this. Before you imagine, I'll tell you. After 3 months, X was having some kind of mindset. Oh, I have done something wrong in my life. Okay. I have to settle this amount to this person from whom I bought goods. He's coming back after 2 years. Sir, you remember me? Yes. Take your 30,000 rupees. I have taken goods from you 2 years ago, but now I'm giving back the money. Take it, sir. Due to some condition, I was not able to meet you. Now I'm giving you. What's the entry now? What's the account are affected here now? One account is simply what to say. What account? Cash, that's it. He's giving cash. That's affected. That's it. Another one? Nothing is affected. Newly some income is coming to you. Now new income is coming to you because already you written off his account. So now this income is called as, it's an income actually.
It's debit.
Unexpected income. This income. Okay, what you can give a name. You have to only give a name now. Bad debts recovered account. Bad debts and bad debts recovered are not having a relationship in the account. Already written. Already it is minus from the profit. Now newly some profit is coming in. So we're considering it as a bad debts recovered account. So entry is cash account debit to bad debts recovered account. Bad debts recovered account is called as nominal account. It's coming under income. Credit all income and gain. It's a gain. Any other transaction?
Sir, can you show like how to write an entry for this split payments?
Which one, sir?
Split payments like 50, like if you say like for furniture, you have account debited of 1 lakh, 50,000 as a cash and 50,000 to account.
Yeah, we are buying a furniture for 1 lakh and we are paying 50,000 in cash and 50,000 through bank. Okay, in that case, the entry is like this. Furniture account debit to cash account 50,000 to bank account 50,000. Bank account 50,000 to cash account 50,000. Okay. 50, 50. Being furniture purchased for 1 lakh, 50,000 paid in cash and 50,000 paid through check. Even if you have another logic, sir, I paid 50,000 in cash, 20,000 in through check, 30,000 I later. I'll pay later. That time, one more 30,000 will come here. This bank will go to 20. Another 30 will be in the vendor name. Who is the vendor from whom you bought? That vendor name will be coming here to vendor account. To vendor account. Okay. When you write two, you have like little inside. Okay. Furniture account debit to cash account, bank account, vendor account. If you know the name of the vendor, write the name of the vendor from whom you buy it. Okay. I hope it is easy. Understandable? Yeah. Anybody from online? Another 2-3 will take and we'll go to ledger. Any other transaction which you come across in your business, in your company?
Professor, I have a question.
Yeah.
Earlier, I think someone just mentioned about gifting, right? Gifting the land or something. So when you are just gifting, I mean, we don't know the value of it at that point, right? Okay. So do you just do some valuation at that moment and add it to the ledger, or how does it work?
Yes, it can be done, but that is not the job of us. After that, it will be told to us. This much worth of goods or asset gifted. That's all. Okay. That asset has to be already there in the books of accounts.
Okay.
Suppose 4,000 worth of goods, you are revaluing it as 5,000 and you are giving it. For him, it may be 5,000. For us, it's only in the books, it's only 4,000. From there only we minus it. Okay. Asset account credit 4,000, gift account debit 4,000. That's all.
Okay. So if the for example, the land is donated to, let's say, some as a charity to some ashram or whatever, right? So how does that entry go actually in the accounting book?
Land was there already in your books of accounts. Debit
as assets
going to be credited.
Okay.
Okay. Donation account debit to land and building land account. That's all.
Okay. So, but the value would come from.
See, only book value. Please understand. We worried about only book value. Cost concept. You remember we studied no cost concept. Okay. So how much ever you purchased, how much you are transferring today. That's it. What is the worth today? That value of asset. We don't worry about that.
Okay.
When you will do that? If you are selling your business to someone else, that time that revaluation takes place. I can't just sell my asset. I bought it for 10 lakhs before 20 years. In the books, it's only showing 20 lakhs. Today, I'm selling the business. I can't just sell that business for only 20 lakh rupees, that asset. Really, it would have been crores. I will go for revaluation of assets and liabilities. Okay. Not in a daily basis. Revaluation will not take place in daily basis. Why? One concept is studied, no? Convention of. We studied no conventions. Some convention studied. What is that? Because of that reason, we should not oversee the profit. We have to only foresee the losses. Okay. Concept of conservatism. Convention of conservatism. Okay. I will not revalue my assets every day, but I will revalue my liabilities every day. Meaning, what does it mean? If there is any loss going to happen, I will be ready for that. I will be providing for that. But there is going to be a profit. Yes, let it happen. After that, I'll write it in the books of account. So revaluation of assets and liabilities will not take place on a daily basis. Only when you are going to change the structure. You are going to sell your business to outsider, or you are going to buy some business, you will have to value that business. Okay. Or you are going to admit a partner into the partnership firm. If it is a partnership company, partnership firm, you are admitting a partner. That time you would revalue all your existing assets and liabilities before you let him in. Okay, that's possible. Yeah. Anything else in general case?
Sir,
Okay,
if
let
you,
me ask a question. Yeah.
sir, I have one.
Yes,
If
yes,
you
gentlemen.
purchase some 1 lakh laptop and
Yeah.
later after 3 years or something, after like 3 years, we scrap it as a 10,000 rupees.
Okay.
So how will?
Cash account debit 10,000 rupees. Laptop account credit 10,000 rupees. That's it.
Okay.
For what? For how much it was purchased, no matter. For how much you're disposing it of. Both are two independent transactions. It may look
Okay.
like
Both way
based on one, another one
consideration
is happening. But for accountant, both are independent of each other.
dependent.
But you might have purchased for 1 lakh. Over a period of time, you might have written off the asset for some values. Every year, you might have credited the asset for 10,000 rupees. 9th year, it will be only 10,000. You are scrapping it for 10,000. That's all over. Zero. Okay. Fine. This is one of the part of the recording. So we should not waste our time much on this. We'll take one more few examples from my side. Then we can move on to the ledger. Okay. Already this gentleman was telling what starting of business. What's the entry? Can you recollect? Starting of business by investing rupees 1 lakh rupee by Mr. Gopinath. Cash account debit to capital account, being business started by cash. Suppose I am starting a business with cash 1 lakh rupee, with furniture from my personal asset. I am bringing 50,000 rupees furniture, and some goods also I am bringing for 30,000 rupees, and 20,000 rupees worth of some accessories I am bringing in. Now what's the entry? Same entry. What same entry? Cash account debit 1 lakh, furniture account debit 50,000, goods account debit 30,000, accessory account debit 20,000. To capital account? Capital account? 1 lakh or 2 lakh? 2 lakhs. Please, all of you understand, those are online. Whatever you are bringing in as a investment, all those things to be debited, all our assets to capital. If you bring only cash, cash to capital. If you bring n number of items, all those items are debited to capital. Total of all those items to be written in capital amount column. Example I told you, cash account debit 1 lakh, furniture account debit 50,000, goods account debit 30,000, accessories account debit 20,000 to capital account 2 lakhs. Being business started with cash 1 lakh rupee, with furniture 50,000, with accessories 20,000, with goods 30,000. Okay. Okay. Next, open the bank account by depositing rupees 20,000. Open the bank account by depositing rupees 20,000. Opened a bank account by depositing rupees 20,000 as entry. Bank account debit to cash account. To cash account. To cash. Okay, that is for opening bank account or depositing into bank. That's it. Amount withdrawn from bank, 5,000 rupees withdrawn from bank account. Cash account debit to bank account, just a reverse entry, opposite. Okay. Goods purchased for credit from Sundar Enterprises. Purchase account debit to Sundar Enterprise account. That's all. Okay. Okay, this is good one. Goods returned to Sundar Enterprise. Goods returned to Sundar Enterprises. Who was our vendor? We bought from him last week. This week we are returning some goods to him. What's the entry? Sundar Enterprise account debit. That's not, no doubt. Undoubtedly, Sundar Enterprise will be debited. Why? On what logic? It's not expenses. Your answer is correct, but logic is not correct. Why are you debiting Sundar Enterprises? Debit the receiver. Personal account rule says debit the receiver. Who is receiving? Sundar Enterprise is receiving. Sundar Enterprise account debit 10,000 rupees. To
Goods
Why
account.
cash account? Are you giving cash to him?
To goods
Purchase
account.
return account. We are creating one more account, nominal account. Purchase a nominal. Opposite of that, purchase return. That's also nominal. So entry. goods returned to the vendor account debit to purchase return account with the amount of goods how much you returned. Purchase return otherwise can be called as return outwards. Some accountant may write it as return outwards. Is there any break that class given already? What's time now? Because all your eyes are going that side. Somebody is attracting you? No? If yes, no. Be positive. Okay. Be positive. Okay. If they are disturbing us, we'll also disturb them and we'll come back after 10 minutes. Is it now 10:30? 11 o'clock. Then it's right time that disturb us. Yes. 11:05 only. Okay. Let us come back after 10 minutes. See you. We are a little slow. You have to little go fast. Come back after 10 minutes. Thank you. There's a break for 10 minutes. Yeah. Those who are online, break for 10 minutes.
Okay, sir.
Okay, sir.
Okay, we can resume now. So, any doubt about journalizing the transactions? Will you be able to journalize any kind of transactions given to you? Yeah, normally opening a business, depositing into bank, drawing money from bank, selling goods, purchasing goods. Okay, payment of rent, payment of any other expenses, and then goods returned to the vendor. Goods returned by the customer. What's the entry? Goods returned by the customer to us.
Sales return.
Yeah.
Sales return, sir.
What's the entry? Journal entry.
Sales return debited to customer account.
The way cash comes into picture, I don't understand. You are not understanding the concept. We sold
I
goods
said
to our customer.
sir.
He is returning some goods to us again. 1 lakh I have billed to my customer. He has not given the money. He told he is going to give later. But after verifying the goods, he is finding some of the defective goods. The defective goods he is sending back. And writing a note, he is sending back. Because of this reason, this many items I am returning to you. Total I purchased from you 1 lakh. Now I am returning to you 10,000 worth of goods. Remaining 90,000 only I will pay you later. That note is called
Purchase.
debit note. He is giving you the note. On receiving the note and goods, you have to make an entry. What entry will you make now? Is there any cash in this? No. So cash won't come. So what's the entry? Sales return account debit to customer's account. That's all. Sales return account debit to customer's account. The worth of goods returned. Okay. So that's sales return. Any other thing? Who? The customer. Then we should not worry about that. Let him scrap. Why? We should not worry about that. Why should we worry about that? If I am standing in the Google gate and asking somebody, tell me the rules of personal account, how does he say? How can I ask him? He is irrelevant to us. He may be a student, but he is irrelevant to us because he is not in our system. Our customer is returning something to me only I am worried about. My customer is committing a suicide. What entry will make in my book? Should I make entry? No. He's getting married. Oh, I misunderstood maybe. Then first of all, there should be a condition that you can just scrap and send a note. Nobody in this world will allow for that. Normal, genuine case. Suppose I am the vendor, you are my customer. You are telling me, sir, your 10,000 worth of goods are not up to the mark. I am just throwing it out. Deduct my 10,000 rupees from the bill. Who is going to do that? What I will ask genuinely, okay, sir, it is defective, no problem. Just bring the goods to me. But suppose if there is an arrangement, the relationship between the vendor and the supplier is like that. Suppose a mutual understanding possible. He is a good, loyal customer. Okay, so many years, there's a relationship, possible. That time I'll make the same entry. Same entry. Maybe possibilities are there. I'm not telling, see, everything under the sun is possible. Okay, is he rightly told? Mutual understanding. You are a very, very worth customer. I have to believe your words. For 10,000, if I don't believe and asking you to send the material, next time what do you do? Okay, enough of buying from you. I'll go for much more than that. For that only, I'm allowing them to just destroy there. Maybe possible. Yeah, good. So in that case, entry is the same. But he is not sending me a note. He only destroying it and he is doing something on his own, then I'm not bothered. That also the supplier is going to forego. Yes, that depending upon the terms of trade. Terms of trade. But as an accountant, what we have to do, if it is agreed by the management, my selling department is saying that yes, he is going to be paying only 80,000 rupees. 10,000 goods lost, 10,000 he has made addition to that. After that only comes to know there is a loss. So we are agreeing for 20,000 rupees. So we have to write purchase return account, sorry, sales return account 20,000 to customer account. Yes, good. Logic, you just see whatever is possible, let it be. We don't worry. But logic, you have to understand only this rule. What is the rule we applied here? Credit the giver. Who is the giver here? Customer. So we credit the customer. Okay. Debit what comes in? What is coming in? Goods coming in. Goods are there in 4 places. Goods purchased, goods sold, goods received back from the customer, goods sent back to the vendor. All the places goods are coming. So instead of writing all the time goods, first goods are purchase, second goods are sales, third goods are purchase return, fourth goods are sales return. That's only logic. Okay, good. Anything else? Sales, purchase, donation, purchase return, sales return, salary paid. That's what I started the class. Salary paid, rent paid. Okay, all those things are fine. Anything else? Any other concept of journal entry you would like to ask? Final one. Anybody from online? Any one transaction finally we take and we'll go for ledger. Yeah. Anybody? Online, offline? Yeah, depreciation. Depreciation account debit to asset account. Suppose you are buying a fixed asset. You know all what is fixed asset. Last class we discussed. We are buying a fixed asset and using it for 1 year. Take for example machine. Purchase of machine for 1 lakh. What's the entry? Machine account debit to cash account 1 lakh. Being machine bought for cash 1 lakh over. After 1 year, 31st March, we are writing a depreciation on this. So depreciation account debit. There are 2 ways of treating a depreciation. One is with provision, another one is without provision. What is with provision? With provision means asset account will remain the same over a period of time. Provisions will be keep on added. Okay, when you are selling the asset, you will compare the original value and the provision. The net value is called book value, and you will compare with the selling value. If you are selling more than the book value, that is called a profit. If you are selling less than the book value, it is called loss. Okay, this is one way of doing it. Another way of doing it, sir, I don't want to keep any provision. Every now and then, whatever depreciation I will minus from the asset. That's called without provision. What's the entry? If you're keeping a provision means depreciation account debit to provision for depreciation account. Provision for depreciation account. If you're keeping provision, asset remains same 1 lakh. No, sir, I don't want to keep provision. I want to just minus the depreciation from the asset when and wherever it is happening. If that is the case, depreciation account debit to asset account. Depreciation account debit. Why it is debited? What's the logic? It's a loss or expense. It's an expense. Debit all expenses. So I'm writing depreciation account debit to asset account. Asset account value comes down because of depreciation. Credit what goes out. It's not going out anywhere, but the automatic value is coming down. That is why. Okay. So these are all the various possible cases of journal entries. Can we move on to the ledger? In the LMS, you have some material in that journal entries are illustrated. You can take that. Whatever you say, the same logic, three logic. Debit what comes in, credit what goes out. Debit the receiver, credit the giver. Debit all in expense and losses, credit all income and gains. You tell any transaction, it will come under that. If you still not having confidence, if you have some more transaction to be discussed, you tell me the transaction. I will just tell you the journal entry. I'll write on the board. I'll type on the Excel sheet. Then we can move on to the ledger. Anybody has any other queries on journal entry? Okay, randomly I'll ask some question again. Then I'll come to know whether you are okay or not. Say for example, goods purchased from Rajesh. Goods purchased from Rajesh Enterprises. Billed amount is 1 lakh. What's the entry? Goods purchased from Rajesh Enterprises. Amount 1 lakh.
Rajesh account debited to.
Rajesh account debit to?
So purchase account debit to Rajesh account.
Okay, you change it. Purchase account debit to Rajesh. Okay, same case. 1 lakh list price goods are sold to Ravi Enterprises for rupees 90,000. What is list price?
Ravi's account.
Okay, still in answer. Yes, sir. Ramesh account debit to
Goods account.
sales account, not goods account. To sales account. Amount how much?
1 lakh.
90,000. Why not 1 lakh? What is 1 lakh? List price. What is list price? Okay, now in colloquial term MRP. Okay. List price means in each and every store or shop, there will be a list maintained, the price list. Each and every item will be written there and the price will be written against that each and every item. That is called list price. Okay, that is 1 lakh rupee. But you are bargaining and getting it for 90,000. Cost concept. How much you are selling, how much you are buying, that is only to be written, not the 1 lakh. Somebody will write like this. Rajesh account debit 1 lakh to sold goods sold. So sales account 90,000, discount account 10,000. No discount here. Here there is no discount. Actually, you're seeking discount only. 1 lakh worth of goods you are giving it for 90,000, but you are recording it also 90,000. The 10,000 is a trade discount. It need not to be recorded. It's not a profit. We are foregoing something. We are compromising our profit. In 1 lakh, my profit may be 15,000. I am compromising to 90,000, so my profit is going to be 5,000. Margin itself, I'm foregoing it. Okay, that's called. In this case, you should not write discount. If invoice is 1 lakh, we would write the bill. I mean, entry as 1 lakh. What is the total of price? How much you are charging the customer? That amount to be written in the book. Not the how much amount are supposed to be charged on the customer. List price, you are keeping a list. At the entrance of the company, you are keeping a list, each and every item. Okay, suppose a car value 15 lakh, on road price 15 lakh. But because of some good concern with you, they are giving you for 14 lakh 50,000. How much they are going to bill it? 14 lakh 50,000 only. In both the books, in their book, they will write customer account debit 14 lakh 50,000 to sales 14 lakh 50,000. In our book, car account debit 14 lakh 50,000 to vendor account if you not paid the money 14 lakh 50,000. Suppose later, after 3 months, you are going back and settling the money. That time also you are telling, sir, 14 lakh 50,000 he told us to pay. It's very costly, sir. Why don't you reduce some 20,000 rupees? That time he is telling, okay, you are such a customer bargaining always. Give me only 14 lakh 30,000. That time, what they will write in the books? Cash account debit 1430. Discount allowed account 20 to customer account 1450. So customer account tallied. That time they will write discount. Then how do you record in your books? Vendor account 1450, to cash 1430, to discount received 20. Being vendor account settled for 1450 by a discount of 20,000. Okay, this is how you have to make entry. Okay, I think it's enough. We are too much discussing about journal entry. Now we can go for the ledger. How do I make a ledger? What is the ledger format? Last class itself I told you. Date, particulars, journal folio number, amount. The same thing is going to come again in the other side. Okay. This is the journal format. This is called a debit side. Okay, this is called credit side. This is debit, DR. This side is credit side. Okay, debit side and credit side. All right. So what is this? This is called ledger format. What is ledger? Ledger is a place where the details of a particular account is written. Cash account means only about cash. Rent account means only about rent. But in journal, you see, we have written everything together. One after another, we written. Started business, cash account debit to capital account. Deposit into bank, bank account debit to cash. Goods purchased, purchase account debit to cash. Goods purchased for credit, purchase account debit to vendor account. Computer purchase, computer account debit to cash. Like that, we keep on entering, irrespective of what is there, what is after. Based on the date, we are writing it. But here it is not so. We just take all those details from journal relating to a particular account. Say, for example, if this is a cash account, if this is a cash account, I will write here cash. Okay. Cash account. Write a heading here. Cash account. Cash account. This is a cash account. Okay. We are going to write all those entries which are there in the journal with regard to cash. With regard to cash. Okay. Say, for example, you have 3 entries like this: cash account debit to capital, bank account debit to cash, purchase to cash. These 3 entries, just now I told you. Starting business, cash to capital. Depositing into bank, bank to cash. Purchasing goods for cash, purchase to cash. Assume these 3 transactions are there in the journal. Now I'm going to bring that into ledger only for cash. How many accounts are there now? Cash to capital, there are 2 accounts. In second entry, bank to cash, 1 new is coming, bank. Third one, purchase to cash, 1 more new is coming. So in these 3 journal entries, totally how many accounts are there? 4 accounts are there. 4 unique individual accounts are there. One among them is cash. I'm going to prepare that cash account. Okay. If you are confusing, I'm just writing the 3 entries in the another sheet, then I'll come to this. Okay. So first entry is cash to capital, cash account debit to capital, cash account debit to capital account. How much? The business started with rupees 1 lakh. If that is the case, I will be writing here 1 lakh, debit side of the journal entry, and the credit side of journal entry 1 lakh. Okay. Forget about the narration and all for time consumption. Second entry, this is for what? This is for starting a business. Then I started a bank account. I opened a bank account. For that, bank account debit, bank account debit, bank account debit. Actually, this bank account debit, the DR should be in the last, just before this column. Okay. Okay. To cash account. No, sorry. To cash account. What is this? This is for this is little difficult to type here. Okay, cash account. This is for opening bank account. 10,000 rupees I'm keeping in the bank to open the bank account. Okay. Third one, I'm buying some goods. So purchase account debit, purchase account debit Purchase account debit to cash. To cash. I bought some goods for my business. Okay. Suppose 50,000. 50,000. Now, like this, there are so many entries are there in the journal. I'm trying to teach you how to record these entries in the ledger. So how many accounts are there? You see, cash account, capital account, bank account, again cash. So I need not count again. Purchase. So 4 accounts are there out of these 3 transactions. Okay. So how do I record now in the cash account? Go to cash account ledger, cash ledger. This is called ledger. Okay, cash ledger, cash account. Okay, look at the journal entry. Cash account is which side? Debit side. So I'll go to debit side of the ledger. I'll write the date here. Suppose if it is 1/1/2022. Okay, the date of this journal entry. Okay, the date of the journal entry will be written there. Okay, it is in debit side. Why it is in debit side? Because of capital is in credit side, it is in debit side. So I will go there where in the ledger account of cash, I will write in the debit side. Why I'm writing in debit side? Since it is in debit. Cash account was in which side here? Cash account was in debit side. So I'm writing in debit side of the cash account. Okay, debit side of the cash account, I'm writing to capital. Why it is to capital? It was there in the journal. Because of capital, cash is debited. How much it is?
1 lakh.
Okay, next come to the journal. Second entry is bank debit to
Cash.
cash. Bank debit to cash. So cash is in which side?
Credit.
Credit side.
Cash is in which side?
Credit.
Credit side. This is in credit side. So I have to go to credit side
Credit.
and write
Bank account.
bank account and write bank account. By bank account. How much it is?
10,000.
10,000. Okay. Simple logic. This is from journal to ledger. For cash, simple another logic is there. Whenever you pay cash, credit side. Whenever the business receives cash, debit side. In such a way that journal also will be there. Okay. Now look at the third one. Third journal. What is the third journal? Purchase to cash. So credit side of the purchase account, credit side of the cash account, I would write by purchase. By purchase. By purchase. Assume that only this transaction took place in the business for 1 year. If you just total the debit side and credit side, how much the difference is there?
85.
Debit side total is
1 lakh.
1 lakh. Credit side total is
60,000.
60,000. But I will write the total of highest amount on both sides. What is the difference now?
40.
The difference is 40. This is written as balance
Bought forward.
carried down. Suppose this is 31st, sorry, 2/2/2022. This is 20/2/2022. Okay. This will be, okay, I take only 1 month. Okay, so this will be the balance of last day of the month. 31/1/2022. What is this meaning? This is nothing but the amount available in the business. If I go and check the cashier, you should be having this amount in the cash box. How much? 40,000. This will go to the next month. 1/2/2022 to balance brought down. Next month operation starts. So this is how you have to make journal, ledger. Look at the purchase ledger. If it is purchase ledger, what you do? Only one entry you'll have to make in the which side? Debit side, purchase account. You have to open another account called purchase account. You have to open another account called bank account, another account called capital account. All are one entry are there. So there is no much transactions. But in a year, it will be so many transactions. Okay. So wherever you have the same account, you have to pick all those accounts together and you have to write it in one single place of that particular heading. Okay, that is called cash account here. Is it understandable? How do we make ledger? Why do we make ledger now? You tell me. To know the balances or to know the total of that particular account. The cash account has both sides, debit, credit. Purchase will always have only one side. There won't be any purchase credit side. So that will give you a total of purchase, how much you made in a full year. Okay. So this is how ledger account. Any doubt in ledger? This is what we call it as balancing of ledger. This how much? How did I get this 40,000? Total of debit side minus total of credit side. Or difference between debit side and credit side. Which side is less? That side you write the difference. Credit side is 2 lakhs, sir. Debit side is only 1,50,000. Difference is 50,000. Write it in the deficit side. In the name of balance. If it is in debit side, to balance. If it is in credit side, by balance. Okay, balance is nothing but what we are finding it out. We are finding and writing in the balancing figure, the difference, the shortage, the surplus or deficiency, whatever it is. Okay, one side is more, one side is less. Okay, this is how we prepare ledger account. So after preparing all the ledger account, the balances of ledger accounts should be brought down to statement. That statement is called as trial balance. We may have 20 ledger, we may have 15 ledger, depending upon the number of accounts available in that company. Okay, so all those balances we'll bring to a place called trial balance. Trial balance will have a format like this: serial number, name of the account, name of the account, name of the account, debit, credit, debit amount, credit amount. Of course, it also may have ledger folio number, debit amount and credit amount, ledger folio number. Listen very carefully. Only those ledger account which is having a balance will come here. Suppose there is an account called Rajesh Enterprise account. Debit side 2 lakh is there and the credit side 2 lakh is there. What's the balance now? Zero balance. That won't come to trial balance because there is no relationship between Rajesh Enterprise and you hereafter. You sold goods to him, you got money after some time. Now it is tallied. His account is settled, closed. So closed account, settled account, no balance account will not appear in the trial balance. Trial balance will give place for all those ledger accounts which has some balances. Now in cash account, cash ledger account, we had a balance of 40,000 rupees. Which side the CD was there? Balance CD was in credit side, meaning debit side was more than that of the credit side. Look at the ledger account of cash once again. Balance CD. I'm just going to that page. Balance CD is in the side of credit. What does it mean? It means that the debit side is more than the credit side. That is why the balance is written in the credit side. Shortage side, we write the balance, we return. When you bring this account to ledger, I mean trial balance, which side you write that 40,000? You are seeing the trial balance here now. Suppose I'm writing here serial number 1, cash account. I'm writing it here, cash account. Which side I have to write the amount? Debit side or credit side?
The ticket examiner want the ticket.
Credit.
Debit. Actually, cash account is having which balance? Debit balance. You may wonder, sir, it is written in the credit side. Yes, it is written in credit side. Why it is written in credit side? Credit side is less. Debit side is more. So debit side is having balance. So you have to write it in the debit side. So how much is the debit side balance? 40,000 rupees. So I'll go to here and write debit side 40,000. Likewise, I will write for all the accounts. How many accounts are there? That many accounts I will write it depending upon the balance of debit and credit. And I will take a total finally. This total should be equal, same amount, some amount. It may be 10 lakh or 1 lakh 50, whatever it is, but both should be
Same.
equal. Both should be equal. If it is not equal, there is some error. There is some error. We have to rectify that. Okay, this is what we call double entry bookkeeping. Why it is equal? Always it's why it's equal. Double entry system. Each and every transaction we recorded in two amount. You remember? Cash paid to Rajesh. Rajesh account debit to cash 10,000, 10,000. Only one 10,000 are giving to Rajesh, but you're writing in two places. Debit also. Why it is so? We are following dual aspect concept. Double entry bookkeeping. Each and every transaction has twofold effect. One is benefit giving, one is benefit receiving. Both are being recorded in the books of accounts. That is why always trial balance tallies. Okay, that is why balance sheet also always has both side equal. Balance sheet. Okay. So any doubt in this? Journal, ledger, and trial balance. Can you make your assignment? Have you read the assignment in the LMS? It is there or not? Okay, I'll spend some time to explain the assignment. Okay, based on whatever we have done in the last class and today's class, your assignment is designed. You have to prepare up to trial balance. What you have to do? You have to make journal, and you have to make ledger, and you have to make trial balance. For what? For a business which you imagine and create it on your own. Yes. Okay, but reasonably. Suppose you are starting a business with 1 crore. Your trial balance is having only 10,000 rupees balance, both side. That is illogical. Some kind of another one. If you are imagining your own transaction, you started a business with 1 lakh rupee. Next transaction, opened bank account with 10 lakh rupee. Not possible. So some logic. Okay, now two burden is there on you. One is answering, another one is creating the question itself. Okay, if I give a question, you can just answer that, but I don't want that. Real time, you think. Okay, what is expected from you? These three are expected from you as an answer. For this, how do you make the situation? You start a company, or in the question, there may be some logic for that starting up a company. Okay, share capital. In the morning before the break, we discussed business started with 1 lakh rupee cash. What's the entry? Cash account debit to capital account, just now on the board. This is a sole proprietorship organization. Suppose if it is a partnership, I already told you. Cash account debit 1 lakh to Raghu's capital account 50,000 to Rajesh's capital account 50,000. This is possible. Partnership. Company form of organization. What is company? We already discussed last class. What is company? Which is having a share capital. Share capital. That time, what is the entry? Bank account debit or cash account, depending upon how you are receiving the money. Normally, company will receive money in bank. Anybody has applied for IPO, initial public offering? All of you may be having LIC policy? No. LIC is threatening, we are coming with this much of money, keep money ready like that. But we don't know how far they are going to allot. So all of you might have linked your Aadhaar and PAN card with your LIC policy. Yes, sir? We don't know how they are going to, what they are telling we are going to, this system is like that last few years. Market is not good or in favor to them like that. Our valuation, my guess is valuation problem. Then this is the first time entity like this coming for market. Okay, so valuation problem also is there. Too much or less something. But anyway, IPO. Suppose LIC is new, not a new company. Suppose new company is coming to the market. Forget about IPO. You are getting money from the shareholder, either from IPO or from any other private placement or something like that. You are getting money. What's the entry? Bank account debit for sure. There is no other chance. Bank account debit to share capital account. Somebody is talking online. That's right. Okay. Okay. So share capital account credit. Simply without writing capital account, I'm writing share capital account. If it is a joint stock company, if it is a limited liability company, if it is a company form of organization, that time my entry is going to be like this. Okay. Bank account debit. Bank account debit to share capital account. That to equity share capital account. Equity share capital account. Okay, 10 lakh, 10 lakh. Okay, suppose, sir, I don't only have equity share, I have preference share also. Then to preference share capital account. What is preference share? The another type of capital that can be taken from the public. Okay, they have some priority. That's why preference share capital. They will be given dividend first. Okay, sir, this is okay. I am borrowing money by issue of debenture. It's all depending upon how we are going to start a company. Sir, my company started by investing only 10 lakh rupees by the shareholder, equity shareholder. What's the entry? Cash to or bank to equity share capital. Over. Sir, I have preference also. Then this will come. Sir, I have preference and again I am borrowing money from the general public by issue of some document called debentures. That time bank account debit to debenture account. What is debenture? Debenture is a document that is given to the provider of money as credit. You are getting money from people as a credit, as a loan. For that, you are giving a evidence. That evidence is called debenture. 14% debenture, 12% debenture, 10% debenture. What is this percentage? That percentage refers to the interest rate, which need to be paid once in a year on 100 rupees, 14 rupees, 16 rupees, 12 rupees, 8 rupees, depending upon the name of the debenture. 8% debenture means name of the debenture. It carries coupon rate of 8%. Okay. So if it is there, you have tried that also entry. Okay. In the assignment, I might have given you some situation. For that, you have to start a company, or I might have given you full freedom. I mean, full logic, you can only assume. But only company. It's not a private, I mean, partnership, or it is not a sole proprietorship. It's a company. After that, you will be asked to reasonably do your business. What is reasonably doing your business for 1 year? Maybe some 50 to 70 transactions. Buying of goods, depending upon the company. What is your company? I might have given you, it's a trading company, or it is a manufacturing company, or it's only a service company. Based on that, you have to generate the transaction. If it is a production company, there should be a purchase of raw material. There should be some wages paid, conversion of raw material into goods, finished goods. Okay, you all assume that, and you bring the goods and you are selling it. All put together, maybe some 50 to 70 transactions for 1 year. Okay, then all these transactions need to be recorded in journal. You are creating transaction. What is transaction? I'll just write like this: bought goods worth rupees 40,000 from so and so, or for cash. That is called transaction. In real life, you will be coming to know the transaction from some documents. But here we are writing in a sentence. What the document conveys to me in one sentence, I'm writing it. That is what we call it as transaction. So you are allowed to generate some transactions. You have to narrate, I mean, you have to describe the transactions. Then you have to journalize it, take to ledger and prepare trial balance. It is not like any minimum or maximum. But normally speaking, if a ledger is there, at least some 2-3 postings are there, means that looks like a ledger. Otherwise, only one item. Look at the cash account, what we prepare now. Debit side, only one item is there, and credit side, 2-3 items are there. Look at this. Where it is? Yeah. Where it is? Sheet 3. Yeah. Look at this. Some kind of 2-3 entries would be there. This is called posting. What he's talking about is posting. Posting means taking bringing from journal to ledger is called posting. Okay. How many postings should be there? At least some 2. Only one side 2. Purchase only out debit side. Sales only out credit side. No problem. But at least there should be some continuity. Purchased goods from Rajesh. You should remember Rajesh to settle him. Or you should remember Rajesh to buy again from him. If you're buying again and again from him, some entry will come in the Rajesh account, Rajesh ledger account. Okay. Or you are returning back goods to him, or you are settling some amount. Like that, you have to imagine and you have to bring some transactions. Okay. Sorry. How many? 1 year. 1 year consists of 12 months. 12 months means 12 months. How do I make transaction? 10 transaction means it 120. No need. Some kind of repeated transaction. See, vendor, you have to create a vendor list. No, in obviously you might have done it. 3 vendors or 2 vendors only. Sellers, I mean the customers, maybe 5, 6. Or that also only 3 or 4. Within them, you have to make transactions again and again. In addition to that, general overheads, general expenses. Okay, some expenses, insurance. Yeah, we did not talk about insurance. No, insurance premium paid. What's the entry? Insurance premium account debit to bank account or cash account. Okay, so these are all the various transactions you have to assume. You have to prepare the journal, ledger, and trail balance. Any doubt? Those who are online, any doubt? Normally, you will be asking so many doubts in the assignment after reading it. Please ask now only. Yeah, this is a good question. Tomorrow? It's not possible. How many days? Minimum 15 days. So next class you are coming, no? When you are coming next class, you submit and come. That is, which day it is? Today it is 20th. Maybe 4th. 4th is Saturday? Monday. So 3rd. After the class you submit, or 2nd, submit and come. 2nd is fine, I think. 2nd April, holiday. Government holiday, I don't know about you. Sorry, sir? Yes. The link is not available for you. Question is available? No? It is there actually. Only the, permission to be given for you to see that. I'll do it and go. While going, I'll do it and go. It is already there. Okay, only the access to you need to be given. 1 click. It will be over. Okay, I'll do that before going. Yes. So 2nd is fine. Yeah, that's another good question. You have all group assignments. So many group assignments you have. So this is going to be individual. In other subject, they may be giving you group. I'm seeing so many messages in the WhatsApp group. Group 1, group 2, group 3 and all. So we have as many group as possible. So individual. Okay. But you can discuss in group, you can work. Okay. If you're really intelligent, you can be in one group of 10 members, an assignment can be made ready. But that intelligence needs some kind of basic understanding. Salary 100 rupees, salary 1000 rupees, salary 10,000 rupees, salary 1 lakh. 4 assignment is ready. Making up question paper by the teacher. Like that, we make salary 10 rupees. Okay, same question, I'll take it. On the top of the table, we'll write all the amounts are in thousands. So 10 rupee becomes 10,000. But that needs some kind of understanding, basic understanding. You don't do that. If you want, you can do, no problem. But only thing is, you should know what it is. Salary paid, what is the entry, how it is treated, how it is coming to trial balance. How much amount, no matter. All of you are having same, 10,000, 10 rupee, 100 rupee, 1 lakh, no matter. But that much identical, don't go. Some kind of discussion you can have. Anything else? Can we move on to the next one? Yeah. Those who are online, are you connected? Are you getting the point of assignment?
Yes, sir.
Yes, sir. Thank you, madam. Yes, there is a good question now. Yes, you have to answer. Otherwise, it's confusion. You can do in any file, any form. It can be as simple as handwritten, as simple as Word, or it can be in Excel. No matter. Or sir, I have one more page maker software. I'll make it in that. You can make it, no problem. But when you submit it to me, it should be in readable, aligned PDF format. If you're doing it in notebook, simple. Take your mobile lens, you can just scan it in single PDF file, upload it. If you're doing it in Excel also, convert that into readable PDF form. If you're converting Excel to PDF, there will be some confusion. You have to carefully do that. Otherwise, Word to PDF. But the final file, what you are submitting to me or uploading to me is PDF. And PDF should be readable. Readable means I'm not telling about open and readable PDF file. Suppose this is the format you made in Excel sheet. When you convert into PDF, these two will be there in first page. This will go to next page. So that I'm talking about readability. Yeah, that you have to take care. Okay, that is not I'm teaching you here. Okay, you might be already knowing it. Okay, good question. Thank you for that. Otherwise, it's confusing. As simple as you can write, scan, and upload. That's also fine. Very traditional. Yes, sir.
Sir, Riaz here. Do you have any limitation that that assignment should consist of 250 words, something like that? We can exceed also. We can.
No, there is no word limit. There is no something like number of pages. Maximum, minimum, nothing is there in our accountancy. But number of transactions may be mentioned in the write-up of the assignment. Number of transactions, 50 or 25, 60, minimum will be mentioned in the assignment.
Got it, sir. Thank you so much.
Any other thing regarding the assignment? Okay, let us come to the next important, very, very important aspect. So far, what you have done is elementary, very, very elementary. Somebody is sitting there, maybe thinking, sir, this and all we studied in 11th standard. Why are you telling again here in the MBA level? But we don't have any other go. We have to study that basic. We have to recollect. So we have done so far. Okay. Now, preparation of financial statement. That is the next stage. Preparation of financial statement of companies. Very, very important. And one line of caution to the BBA, BCom, or commerce, so-called commerce students. The format what we are going to use now should be followed by you in the exam. Otherwise, you will get 0 because you may be having some kind of idea in finding out the profit and loss. Okay, especially look at this Excel sheet. I think it is visible for all of you. You might have done T format, just like a ledger, just like this. You might have done a profit and loss account. This is called T form, T account. In European books and American books, they'll call it as T form of accounts, T accounts. Why it is called T accounts? See, up to this date, one side, this is another side. If you draw one line here, it will look like a English letter T. So it's called T account. You might have done your profit and loss account and the balance sheet in this form, T form. But here we are not going to do in that form. Others, those are learning newly, no problem. Those who learned, you have to unlearn that now and you have to learn this new format. What is this new format? Indian Companies Act 2013 is telling you how to prepare the profit and loss account and how to prepare the balance sheet. We have to follow that format. Other concept, principle remains the same. Nobody can change it. Basic concept, the 3 rules we studied, the trial balance we studied, everything remains same. But the form, how do you display it? How do you depict it? Okay, that is going to be displayed, given by the Companies Act 2013. We have to follow that. Okay, that is called a statement form. What is a statement form? Okay, before I come to that form, I'll just explain to you what is this. Financial statement. Why do we prepare financial statement? To know the performance of the company and to know the performance and position. Okay, performance is known from P&L account, profit and loss account, otherwise called income statement, statement of income and expenditure. Another one is position, balance sheet. These two we are going to prepare. To prepare this, what we need? What we just left out, from there you have to start. What we left out now?
Ledger.
Trial balance. From the trial balance, you have to start. Next stage is preparation of financial statement. We have trial balance, and we should have some of the informations relating to the company which are not recorded in the journal. Raw transaction, that is called adjustments. Technically in accounting, we call them as adjustment. What is adjustment? Adjustments are nothing but raw transaction. Why it is called raw transaction? It has not gone through any of the books. It has not entered in any of the books. Today only I come to know. Today only I'm going to prepare the final accounts. I already prepared the trial balance. So I will not again go to journal, ledger, and trial balance. I will directly give impact in the financial statement. So when you come across any kind of such adjustments, that will be there in the that will be there outside the trial balance. Okay, closing stock rupees 20,000. This is one example for the adjustment. Closing stock. It won't be there in the trial balance. So what to do? If any items are there apart from trial balance, you have to record it in two places. Please understand why. Why it should be recorded in two places? Because it has not entered in any of the books. If it has entered in the journal entry, we'll write it in two accounts. Right? We'll write it in two places. So directly we are giving now in the financial statement. So we have to write it in two places. What two places? If one is in debit side, another should be in credit side. If one is in credit side, another should be in debit side. That's the logic. Okay. Adjustment. Example for adjustment is closing stock. Depreciation. You bought a machine, recorded in journal, come into ledger, came into trial balance. Over. But management decides every year 10% of the machinery value should be depreciated. It's a decision taken by the management based on the income tax law as well as Companies Act as well as the management policy. We don't worry about that. We will be informed about that. So we have to carry out that in the trial, in the adjustment itself, in the final account itself. So one is you have to minus from asset, another one you have to minus from profit. Depreciation loss or expense to be minus from profit, asset value to be minused. Like that, we have some adjustments. I'll tell you little later. But now come to the two statement, income statement, otherwise statement of profit and loss. Another one is balance sheet. First of all, we should be very clear. In the trial balance, we have lot of accounts. Okay, all those accounts can be of any one of these five. What are the five? Recollect what we discussed long back. 5 items: income, expenditure, equity, asset, liability. Only these 5 possibilities. Whatever you see in the trial balance should be of any one of these 5. Okay. If it is so, now out of these 5, what and all will go to profit and loss account? Income and expenditure only. The 3 will go to asset, liability, and equity should be recorded in balance sheet only. Why? That is about position. This is about performance. Clear. Now, how do I identify the 5 items? There are 20, 30 items will be there. How do I group them into these 5? Salary. What's an example? Salary is a expenditure. Share capital. Equity. Okay. Rent received. Income. Commission paid. Donation. Land and building. Patent. Copyright. Goodwill. 8% debentures. Liability. Bank loan. Deposits in bank. Asset. Okay. Profit and loss account. Some balance. No, I'm not telling about a statement. You are right. But there is an item in the trial balance in the name of profit and loss account. Rupees 20,000 is given there. What is that? It depends on the side. Suppose if in the trial balance, there is an item called profit and loss account, amount given the debit side 20,000. That is called asset. Profit and loss account in trial balance, same 20,000 rupees, which is in the credit side. That time it is liability. Please understand, liability side of the profit and loss account is good for the company. Asset side of the profit and loss account is not good. When the profit and loss account will be in the asset side, there's a loss. If there is a loss, profit and loss account will appear in the trial balance in the side of debit. Okay, forget about that. Just understand, if debit side, it's a loss, asset, credit side is a income, and it is liability. Profit of the company is a liability. Please understand why. Profit of the company should be distributed to whom? Owner, shareholder. For the company, it is liability. It will be added to the equity. Okay, right. Another example, suppose you have some stock in hand, stock in trade, closing stock, asset. Okay, so like this, you have to categorize it. First, you write in the A, B, like that, asset, liability, something, categorize it. Then you have to group them into two statements. Okay, suppose in the adjustment, they're telling you wages are still outstanding for 2,000 rupees. What do you mean by outstanding? To be paid. So what do you do now? Liability. But I told you, if it is an adjustment, you have to write it in two places. One, you are sure it is going to balance sheet, it's going to be in liability. Another one, current year wage is there, no? With that wage, you have to add this. We should have paid 14, but we have paid only 12. 2 is still outstanding. To charge the current year income, we have to take 14,000 rupees as wages. So you have to add with the wage before you take the total expenditure of the company, to minus the expenditure from the income to find out the profit. This is a basic logic. Now I'll give you the format. How do we prepare the format? It's very simple. It's not like debit credit. It is going to be in a statement format. Look at this. Okay, now I'll tell you one thing. All of you take your phone. Instead of me typing in the Excel sheet, go to any one of the companies. Are common, you take any one company. Download their profit and loss account and balance sheet. Which company you all like? Or any one company, common name? Manufacturing company or trading company? Which one? Quickly. Tata Motors. Tata Motors. Download the Tata Motors latest financial statement. I'll also do it here if net is on. Tata Motors. Financial statement of Tata Motors. I go to Tata Motors company website. There will be one link. Okay, download that financial statement. Financial statement of Tata Motors. If you type in Google or go to directly Tata Motors company website. Yeah, are you able to download? All listed companies' financial statements are publicly available document. It's a legal obligation on the listed companies to display that in the public domain. I hope definitely you will be getting Tata Motors financial statement 2020, 21 or 21, 20, 2021. 2021. Annual report. In the annual report, it will be there, or it may be separately also financials. There also it will be there. Both will be same. Or some other third party might have taken that and they might have displayed in their balance sheet. Money Control, Yahoo Finance. Yeah. Yeah. Not this. Not this. Just to go to annual report, and in that annual report, one of the pages it will be there. Please do that. Sorry, sir. Yeah, in financials also it will be there. No, full sheet. Not this. You go to annual report. Yeah, yes, that kind of thing. Can you download and send it in WhatsApp group, sir, for all of us? Yeah. Yes, this annual report is there. No, go to this annual report. In that annual report, there will be 1, 2, 3 pages. In annual report, first page they'll be giving content. Yeah, in annual report, if you go, there will be a content page. In that content page, there will be a mentioning profit and loss account, balance sheet, like that. I think Sarah has taken, he will be forwarding to all of us. You can check later. Done, sir? Posted. 400 pages annual report. Don't worry, don't get panic, something like that. We are not going to do anything on that. Control F, you put profit and loss account in that statement. Statement of profit and loss, yes. Statement of profit and loss. Are you able to find it out? Which page number, sir? Out of 400 page. If you read that 400 page, you will be getting A to Z of that company. Annual report is compulsory document. Every year, listed companies have to publish it in the public domain. Page number 11. I don't think so. 11th page will be, yeah, maybe. 11th page may not be a profit and loss account. There will be so many other messages before it.
I think the 5th page, sir.
It's 181, I suppose.
Yeah, statement of profit and loss. Yes. Page number
181.
Page number 10 itself is there. The condensed will be there. Don't go that. You go to the real one.
Page number 181.
181. Page number 181. Normally, profit and loss account may not be there in the first 10 pages. That too, in a report of 400 pages report, there are so many things to be given. Yeah, one gentleman is telling about 187. How many statements are there? Statement of profit and loss. Maybe if it is a group of companies, there will be different one. Consolidated balance sheet, you go. Consolidated balance sheet and P&L account. Okay. First one will be balance sheet. After that, only P&L account will be there. Yes. Yeah. Go to P&L account. Someone can read it for the class. Only the items given in the balance sheet. I mean, P&L account. Yes, that is the first starting point. Revenue from operation is the first starting point. Before that, the heading like that. Profit and loss account, a statement of profit and loss for the year ended 31st March 2021. Okay, of which company? Tata Motors or any company which are going to do it. Okay, or first you can write the company name, Tata Motors. Statement of profit and loss account for the year ended 31st March 2022. Okay, now the format. Let us go to the content little later. First you format, you see. First one is serial number is there. Serial number are not given. There is a number 1, 2, 3. Roman letter 1, 2, 3 will be there. Yeah. Second column is particulars. Particulars. Third column is note number. Okay, note number. Another column is current year and last year. But now we don't want 2 years. We'll have only 1 year. In practice, they have to display this for 2 consecutive years. Current year and previous year. But in academics, we just study how to prepare it. So only 1 year here we are going to take and prepare it. Am I right? So I repeat again, the format, serial number, particulars, note number, amount. Please write that in the notebook. Write that in the notebook. Statement of profit and loss. Statement of profit and loss. Statement of profit and loss for the year ended. For the year ended. Which year you are preparing, that year you fill it, just write a dash. For the year ended, dash. Okay. Serial number. Next, take a format. Serial number. Those are online. Are you able to get connected now? The Tata Motors statement you all taken, right? Yeah, yes.
Yes, sir.
Yeah, okay, fine. So serial number. Next one is particulars. Okay. Next, note number. Then amount. In real life, there will be 2 amount column. One is for the current year, another one is for previous year. Just for a comparison purpose, it is a legal requirement. They have to show it in 2 columns. But for class, we are writing only for 1 column. Only 1 year we are preparing. If you know for preparing 1 year, you can prepare for a number of years. Okay. So this is a format. First item. Serial number 1. Revenue from operation. Is it there? Revenue from operation. Okay, what does it mean? From the trial, in trial balance, there won't be any column called revenue from I mean, there is no item called revenue from operation. Then what will be there in trial balance? Sales will be there. Sale of goods, sale of services, or sale of many items may be there. Okay. So revenue from operation means the amount that the company generated, that the company earned out of their core business activities. Sale of motor vehicles in this case. Okay. If you are a paint manufacturing company, sale of paints. Okay. From the trial balance, you have to identify the sales value here. Revenue from operation. Or in the trial balance, if there is any item called revenue from operation, just bring that. That's no problem. But most of the case in academics, we don't have that word revenue from operation. We'll be giving you sales. So you have to bring that sales only here. Next, point number 2, other income. Is it there? Other operating revenue, other income. Other income. Apart from the major income, what are the other incomes are there in the trial balance? You have to total it. Listen, why there is a note number? In trial balance, there may be 2-3 items which we need to club together and bring it as a revenue from operation or other income. Okay, that you need to do it in a working note. You have to number that note. Serial number. Actually speaking, according to law, balance sheet is the first document. P&L account is the second document. The first item in the balance sheet should start with note number 1. 1 is prior to 2. No, balance sheet is the first document. After that, we have profit and loss account. So balance sheet is the first document means we have to start the numbering from balance sheet. But actually speaking, we prepare P&L account first, and we'll prepare the balance sheet next. But in the display, in the report, we report the balance sheet first. What is a balance sheet? Statement which is showing about the financial position of the company, which consists of equity, liability, asset. Profit and loss is a part of equity. Profit is part of equity. So profit and loss account is the explanation for equity. That's a logic. Profit and loss account is an explanation for the amount of equity. Suppose I started the business by 20 lakhs. Now my equity is 30 lakhs, meaning is 10 lakh I have earned as a profit. How did you earn? That is being explained in the profit and loss account. That is why P&L account comes next. But when we are doing it, we prepare P&L account first. I should know how much profit is, then I'll add with the previous year equity, then closing equity will be going to balance sheet. Okay, so that is why numbering, when you are numbering it, you prepare all the note without number. Without number, you prepare all the note. Then after you write every amount in the balance sheet, start the number 1 from balance sheet item, first item. Okay, suppose balance sheet 10 items are there. Note number 10 is the last item in the balance sheet. So what should be the first item in the first note number in the P&L account? 11. If there are 10, the 11th item will be coming in. The revenue from operations should be note number 11. I'm just giving an example. Sir, only balance sheet has 9 items. Note number 9 is the last note number in the balance sheet. What should be the note number for revenue from operation? Please tell. 10. Sir, in the balance sheet, the last item, last note number is 15. Then revenue from operation should start from note number 16. So what should you do? You prepare all the note without numbering. Write all the amount. After that, you give note number. That's all over. So revenue from operation, then other income. Next is equal to total revenue. Roman letter 3. Total revenue. You have to add these two and write it. Only this format you have to prepare. I'm telling you again. This is the real life. This is the company form of organization format. Yeah. Next, minus, not even minus. Next item is expenses. Is there? Other income, you done it? No. Only 2. There are 3. They have given 3. Revenue from operation, revenue from other operating activity, and then other income. Okay, don't worry. We have only 2. Revenue from operation and then other income. Next is total income or total revenue. Okay. Suppose 10 lakh is from revenue from operation, 5 lakh is from other income. We take a total of that two and write it in total revenue. Okay. Next, expenses. Expenses. Is there? Expenses. Point number A or 1. Point number 1. Under expense is a heading. Underline the expense under that point number 1. What is point number 1? Raw material consumed. Cost of materials consumed. This will come only for those companies which are doing manufacturing. Sir, I am just buying and selling. This item will be nil. But you have to write the format. Point number 2 or B. Okay, before going to that, how do you find out the raw material consumed? We have to prepare a note. In trial balance, you will not have any ready-made item called raw material consumed. What is raw material consumed? Opening stock of raw material plus purchase of raw material plus expenses on purchase of raw material minus purchase return minus closing stock of raw material. If you do this, you will end up with one amount. That amount is called material consumed, cost of material consumed. I repeat it again. Opening stock of raw material plus purchase of raw material plus any expenses on purchase of that raw material. Carrying cost, brokerage, insurance, anything on that. Minus closing stock of raw material and also minus purchase return. That is going to give you the raw material consumed. Okay, point number B. What's the next expense is there? Purchase of stock in trade or purchase of products. Purchase, this will come only for whose? Which company? Purchase of stock in trade will come only for trading companies. They buy and sell. Okay, purchase of stock in trade or purchase of product. Purchase of product. Academically, we call it a stock in trade. Stock in trade means I buy that stock as it is, I sell. I don't even add any value to that. Okay, this will come only for trading companies. Some companies will be there. They produce as well as whichever not able to produce, they buy and sell it to satisfy the customer. That time both will come. Okay, next point number C. Change in inventories. Change in inventories. Change in inventories. What is this? Except raw material, all opening close taken here. What is that except raw material? You have work in progress. You have finished goods. You have stock in trade. Mean products. Opening stock of these three minus closing stock of these three. Whatever you are getting with the sign, you have to write it there. It can be plus or it can be minus. Example. Opening stock of work in progress, 10,000. Opening stock of finished goods, 20,000. Opening stock of products, 30,000. So 10 plus 20 plus 30 is equal to 60. Minus closing stock of all these three. Example, it is equal to 70,000. Assume. So 60 minus 70 is equal to minus 10. You have to write it in that column. Minus 10. As it is, you have to write it. Closing stock of all inventories except raw material. Raw material opening and closing already taken care. Where? In the first item. Cost of raw material consumed. In that, we already taken care of closing and opening of raw material. Except raw material, three items will be there. Work in progress, if it is a manufacturing company. Finished goods, if it is a manufacturing company. Stock in trade or products, if it is a trading company. All these three, opening added separately, closing added separately. From opening, you minus the closing, whatever is there, you just write it. Okay, next. What's the next one? Employee benefit expenses, all the expense which are payable to the employee, salary, wages, salesman commission, etc. All. Okay. Employee benefit expenses. Next, finance cost is there. Next one is finance cost. Finance cost means your banking charges, interest on the loan taken, interest on the debenture whatever you pay as interest, finance your company, whatever you are spending, that will come there. Okay, please understand, interest paid as well as interest payable. Suppose you've taken a debenture, 1 lakh rupees debenture, 10% interest. You have to pay 10,000 rupees as interest, but you are not paid 10,000, you paid only 5,000. But how much you have to take it here? 10,000. In trial balance, how much will be there? 5,000 will be there. Where you come to know the other 5,000? Adjustment. Interest on debenture is not paid for the next 6 months, or only paid for 6 months. So what to do now? This 5,000 will add with the interest in the finance cost. Same 5,000 rupees you have to give it in balance sheet liability side, interest outstanding. Okay, I'll talk about that little later next class. We'll finish this format. Next one is depreciation and amortization. Is there? Depreciation and amortization. Sorry, sir. That you leave it. You leave it. That's only for those companies which are involving in, which are exposed to foreign trade. Okay, we'll ignore that. In general, we'll ignore that. Yeah. Next one is, okay, very next one is amortization, depreciation. Yeah, depreciation and amortization cost. So whatever the amount of depreciation you charge to the various asset, and what are the reduction in the intangible asset is called amortization. Tangible asset is depreciation, intangible asset is amortization, the reduction in the value. Both put together, you have to prepare a note. In the note, how much you are getting, that amount you have to bring it here and write it in the column called depreciation and amortization. Okay, next item, other expenses, or anything else is there? No need. Next one, other expenses. Take other expenses. That is depending upon the nature of company, 1 or 2 items will be added, but these are all the very common items. So A, B, C, D, E, F. F is the last one. G is the other expenses. Apart from this first A, B, C, D, E, up to that, whatever is covered, whatever is not covered, everything will come under other expenses. Suppose there is an expense called audit fee. You would write it in other expenses. Advertisement. No, don't write advertisement. Format is that only. Format is that much only. I'm asking an example. Advertisement, where you will record this? Example for other expenses. Insurance premium. Where you will write it? Suppose you're finding an item in trial balance. Insurance premium, 20,000 rupees. Where you will record in the, P&L account. Other expenses. So whichever is not explicitly given in the A, B, C, D, E, starting from material cost to amortization. If it is not fitting under any one of this category, you have to bring to other expenses. You have to prepare a note, other expenses, point number 1, 2, 3, 4, 5. What are the expenses? Take the total, bring the total here. Next, what is there? Total expense is there? Total expenses. Total expenses. Are we running out of time? Yes. Total expenses. I'll take another two more minutes. Okay. Total expenses. After that, profit or loss. Profit or loss. From the third, we are minusing the fourth. If you take that serial number 1 as revenue from operation, serial number 2 is other income, serial number 3 will be total income or total revenue. From the total revenue, we are minusing the total expense. 3 minus 4. Whatever you are getting, that you are writing in the amount column. That is called profit or loss before that. Okay, I'll take 30 seconds to explain that. Exceptional item, extraordinary item, discontinued business, and all is the special case. Suppose I have 2-3 businesses. One business I'm discontinuing in the middle of the year itself. Extraordinary item means which is not regular item. Maybe grant you are getting in a huge amount. There is a loss of fire or anything else like that. So all those things are called as exceptional items. But we consider the business is going to be normal. So we write profit or loss before tax. That's all. Yeah. But it is not just EBIT. EBIT is already we are minus the depreciation. No, sorry, interest we minused. EBIT is asking about on usage. EBIT, earnings before interest and tax. But what we are getting is not earnings before interest and tax. It can be called as earnings before tax, because already we minus the finance cost. So it can be called as EBT, earnings before tax. But that is a internal usage. For law, it is profit before tax. Okay, profit before tax. From that, you can minus tax. Next row is minus tax. After that, if you minus tax, you'll get EAT or PAT, profit after tax. Profit after tax. It's very simple format. In this format only, we have to prepare the profit and loss account. Okay, I'll give you one small work. Go through this annual report, especially the two statement. Okay, you copy the balance sheet also in this format, not with amount and all. Just now what we done for P&L account, same thing you do it for balance sheet. Equity and liabilities, some items will be there. After that, assets will be there, some items. Fixed asset and current asset will be there. Just to copy that and come to the next class. We will try to understand how to prepare these statements for a given company. Is it okay? Any doubt before we close it? But sincerely read this annual report. Whenever you are free, just go through that. Sir, I don't like Tata. Then whatever you like, you go there and read it. Okay, it's not like only you have to read the Tata Motors. Whichever the company you are in or you like, you can take and read it. But read annual report. Last week, I told you one small assignment. That is reading the NCERT textbook. You've done it? See, downloaded it. First step is done. You should have read no ABCD. ABCD only I given you. Okay, anyway, if you're not done, please do that. Okay, and do this also and come to the next class. Any doubt before we close it? We are affordable to 1 or 2 minutes. Those are online. With your permission, can we close the class, or you have any more doubts quickly to clarify? Anybody? Okay, so today we discussed about journal, ledger, trial balance, and we have given a base for preparation of financial statement. Okay, anybody from online?
No, sir. Thank you.
Okay, sir. We can.
Nobody is there?
Yes, sir. We are there. We
Yeah,
can
okay. No doubt is there. Fine, you are there, but no doubt is there. Thank you. See you again in the next class. Thank you so much.
Thank you very much.
Thank you, sir.